Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Tuesday, July 28th. Thank you, everybody, for being here. We are back and ready to go. Took off yesterday. You guys couldn't let me take 24 hours without having to crash the markets. For some reason, this is the fourth time this year that I missed a show, and you guys just let the entire AI trade collapse. You let the entire AI bubble pop. I mean, I don't know why you guys have to do it every single time I'm gone, but we're back. Now, granted, some of the macro issues we're dealing with, I don't know if me being back is enough to save the markets today, but we've got a lot to talk about. We have a lot to talk about to get into. Thank you, everybody, for being here. We have so much that has happened over the past 24 hours. So much that I've had to digest in terms of studying over the past 24 hours. Obviously, yesterday I was not here. I was at the Pouncer event. I think some of you guys saw the Carp interview, which was fun. That was very impromptu. I did not know I was going to be interviewing Carp. I got told on Friday that they were having an event on Monday. And that's why I told you guys Friday on the market close that I would be missing the market open. And then Carp saw me early on Monday morning and said, hey, let's do something. And we ended up doing the interview. So it's a fun interview. We can talk more about that later. I think a lot of you guys enjoyed it. We were swaying back and forth a lot. It's it's the nature of two people that are jittery. It's kind of hard to sit still. So it was a fun interview. It was a good one. And I'm happy people enjoyed it. But during the entire event, which was essentially an event around institutional sovereignty, all the stuff that Pouncer has been talking about when it comes to open source, while I was at the event, obviously I was looking at the market, and I think basically around 9:30. It was funny yesterday. What happened yesterday was the pre-market, everything was up because the NVIDIA news on Sunday. And we'll talk about some of that news. We've got a lot of different catalysts for what I think is happening right now that's creating this cascading effect on the equity markets. Unfortunately, you have Kospi that dropped 10% yesterday, which is why all the memory names are getting hit pretty badly right now. But pre-markets were an absolute fake out because everything yesterday was green pre-market. I mean, Micron was hitting 900, NVIDIA was hitting 210. As soon as that market opened, I mean, it was if that was not the most manufactured pre-market pump that we have ever seen, then I don't know what was. And I think part of the reason people believed it was because futures were up very nicely on Sunday. We had one of the best futures opens that we've had all year, and oil prices, which are down another 1.5% today, made people think, okay, if Trump is calming down with Iran, which by the way, Trump was just on Fox News literally 10 minutes ago, and he had some actually de-escalatory things to say. He said a bunch of stuff that makes you think he doesn't want to bomb a ton of power plants and bridges, because I think even he's recognizing, okay, if I actually go through with this, the stock market might actually collapse. So I think everyone thought yesterday in the pre-markets, we're good to go. We're going to be okay. And as soon as the market opened, that was not the case. And quite frankly, when NVIDIA fell below 200 within like 20 minutes of the market opening, that was the sign of like, okay, there is an unwind happening right now, whether it's because of leverage, whether it's because of algos, whether it's because of there's broader doubts in the semiconductor trade. NVIDIA, again, down about 0.5% of the pre-market. Tesla's down 0.5%. ARM is down 4%. Nebius is down 3%. Micron is down 7% right now in the pre-market. Micron recovered yesterday up to 900 at the market close after falling about $70, and now it's down worse than even where it was yesterday. So there's obviously something that is breaking in the broader trade, at least in the short term, for how the market's interpreting it. I don't think that means the entire trade is broken. I think there's a lot of layers of analysis that we have to talk about, but something in the short term is happening. And quite frankly, something in the short term AI trade is happening that a lot of us predicted, or a lot of us at least knew about going into the month of July, when you have momentum-driven downturns, when there is super high levels of concentration in one sector. You get a lot of leverage into the trade. One or two companies don't have the best earnings, or maybe they do have good earnings, but the sustainability of those earnings are in question, because the S&P 500, as you can see, is still holding up, barely down from its all-time highs, less than 3%. That could crack the trade in the short term, and I think that's what we're seeing right now. But obviously, we'll have a lot to discuss in terms of why that trade is getting cracked. Memory is a big component of this. SanDisk fell 11% yesterday. It's down another 7% today. Corning, good earnings. Market doesn't care. Down 17%. I mean, if you're reporting semiconductor earnings right now in this environment, TSM can't get a pump, ASML can't get a pump, Intel can't get a pump. All three of those companies, just unbelievably phenomenal numbers. You could either say it was priced in, you could say the market doesn't care, you could say the market doesn't believe in the sustainability of the growth of those numbers, but Corning right there. Remember, NVIDIA bought, $300 million of this stock
or no, sorry, it was like 100 million shares. I have to check they have 100 million warrants at 160. So a lot of these names, whether it's a Nebius, Corning, et cetera, that are getting hit, are NVIDIA investments. CoreWeave obviously has been taking a hit. All the Neo clouds going down. CoreWeave down at about 1.69%. And then you had Amcor yesterday, which they missed a little bit on guidance by like 50 million. And still, the street does not care. The stock was up 20% last week because of an NVIDIA partnership after hours. Stock is now down 27% from those highs, down 11% after hours. And obviously that's affecting a lot of the other high beta names. The space names are getting wrecked. Robinhood down about 1.29%. Even Robinhood faked people out yesterday. Went up to 99, then came right down to 93.81. SpaceX has been an absolute disaster. And, you know, this one I think was well predicted, but unfortunately that's hurting all the different space trades. SpaceX right there down another 3% of the pre-market. Rocket Lab down 2.5%. So we have a lot to talk about because there is a lot going on for why I think this is happening. A lot of that has to do with macro. A lot of that also has to do with the broader AI trade. I think some of you guys heard a couple of the stories coming out of China yesterday, including China's second largest IPO in history with the memory company. You put all the pieces to that puzzle together, it at least gives somewhat of an explanation for why the market is scared. And that's what we're gonna have to talk about today to go a bit more deeper in terms of what's happening. SK Hynix is down 16% last night. Samsung was also down 10%. I mean, it's ugly. It is absolutely ugly. And you know, again, quite frankly, I think the past few weeks of price action, and not even just like market news and forget Kimi K3, no, just price action, right? Like some of the more basic elements of understanding price action is, and you know, Jason talks about this all the time. We will have Technical Tuesday today, that when a stock can't react to good earnings or good catalysts, it means there's something wrong with the story, or at least something wrong with the sentiment around the story. And in this case, the stock is the semis in general. They cannot react to anything good, anything positive, whether that's earnings, catalysts, Jensen coming out saying, I mean, you know, the Jensen pump is really not working anymore. Marvell obviously taking a pretty ugly hit. That's down another 5% of the pre-market. And so Jensen's comments aren't saving anything. The company's earnings aren't saving anything. The analyst sell side notes of $2,000 price targets on memory names and, you know, Intel $150 price targets I saw yesterday, that's not saving anything. So right now, structurally, the trade is in trouble. Having said that, usually when it gets that bad, you tend to find a little bit of a bottom and see where the positive catalyst can come in, give it some time, let that consolidation happen and see if things can move on. But I think most people are questioning, which we will try to discuss today, is the trade in trouble or is the trade over? And I don't think we're gonna have an answer today. I don't think we're gonna have an answer for the next coming days, maybe not the next coming weeks, but I think that will be the most important thing to explore. Is the trade in trouble or is it completely wrecked? And I think there's corresponding answers to both sides that we will be able to explore. So let's get into it. We got a lot to talk about. Obviously, we had a lot of earnings today. Yesterday, we had a few earnings, nothing too crazy. We had Amcor yesterday after the bell. Tomorrow is going to be a big one because we also had Navitas yesterday that we'll talk about. Tomorrow, we have Robinhood, Meta, and Microsoft. Not only that, we have the FOMC. And we also have SoFi in the morning. So tomorrow is going to be a very, very long day. And we're going to have a lot to talk about in terms of all those different earnings. And we'll have a lot to get into as well. But I think the FOMC tomorrow is going to be one of the major things that, you know, is going to create a lot of fear for people. And part of the reason it's going to create a lot of fear, let's just get right into the piece of news that came out yesterday. This is also part of the reason why I think we're down. This is also part of the reason why I think we're down. I'm also really curious to see if NVIDIA gets any support at 193, 194, which is kind of what it touched pre-market, or, you know, are we going below 190? Because if we're going below 190, we're making new lows across most of the semis, and a lot of these semis have already made new lows. NVIDIA's kind of tottering around this 190 range, but if we actually lose those levels, then, you know, that I think could also be an indicator for where the broader markets decide to go this week. And then we got to see if the CapEx can save us, because Google's CapEx unfortunately did not save us last week, even though they said they're going to continue to spend a ton of money. Ironically, some of the announcements NVIDIA made over the weekend unofficially also are part of the reason why NVIDIA is down, along with the semi. So this is the first story we got to get into. This is why I think the pre-market in and of itself intrinsically would be red before we get into any of the earnings. Citadel comes out yesterday. And we know Citadel, one of the largest market makers in the world, when they say something, the market pays attention to it. They think Kevin Warsh is going to give us a surprise 25 basis point hike on Wednesday, aka tomorrow. The firm says markets may be underestimating the Fed's hawkish shift and that a surprise hike would strengthen its inflation-fighting credibility. Interest rate swaps currently price about a 40% chance of a hike this week, which again is happening tomorrow. I'll be live at 2:30 to cover the FOMC with a full hike priced in by September. September, it's more like 70% chance. Citadel also says the recent energy price increases could tip the balance towards an immediate move. We saw energy go up 25% in the past month. If that didn't happen, I think it would be unlikely for us to get a hike. Now, we are down. This is the other surprising thing about what's going on in the equity markets right now. We're down 10% on energy, 93 to 81 in the past, 48 hours? And still, the most high beta of the high beta names are just getting wrecked, even with oil coming down. I know it's not at 65, but still a 10% decline in oil. Whoever bought those puts that we talked about on Friday, someone bought like 20 million of puts on XLE. Yeah, that worked out. Short energy over the past 2 days has been a good trade, but it hasn't corresponded to high beta equities going higher. And I think that's because the market's now thinking, there might be a chance for a rate hike. I am still under the impression, and if I'm wrong, I'm wrong, but I don't think we're going to hike rates tomorrow. I think that would be quite surprising. That would literally be a surprise rate hike. The last time the market went against the expectations of the Fed future swaps was 1994. So it's been a while since the market has surprised us, or I should say the Fed has surprised us when it comes to a surprise hike. Usually, even in 2022, the market knew the Fed was going to hike because inflation was 10%. So it wasn't a surprise. It was annoying because, rate hikes aren't good for stocks. But we knew it was going to happen. This time, it's not supposed to happen tomorrow. So if it does happen, it's going to be one of those things that we all have to deal with. But that is one of the cascading reasons I think we should start off with for why things are ugly right now, at least in the pre-market. And maybe, things were really nice yesterday in the pre-market, then we tanked. Maybe things are really ugly right now in the pre-market and we get a little bit of relief. We'll see what happens in 30 minutes. But that is, I think, one of the first reasons. Trump will literally choke out Warsh. I don't think he has the authority to choke him out. He will definitely, I think, have some words for Warsh if this happens. And, Trump took about 2 years to diverge from J-Pow. Was it 2 years? No, it was 1 year because he got anointed in 2017 May. By 2018 December, J-Pow started hiking. 2018 December, midterm year, was a really ugly last couple months for the S&P 500. I think we were down like 20% that year. And Trump wasn't happy about the rate hikes. So I think within 8 months, Trump was annoyed with Powell back then. Who knows? Maybe he's going to be annoyed with Warsh sooner than that, or maybe he keeps some of his composure. But if we do get a hike, I don't think he would be the happiest when it comes to navigating Kevin Warsh. So that was the first reason why I think we're down. The second reason, and this is the more important reason from what happened yesterday, and this goes into a myriad of different things that have happened, but this NVIDIA backstop news at some point, and I know you guys probably heard it. If you didn't, you're seeing it right now. I think the market's annoyed. I think the market is starting to really get freaking annoyed about what's happening right here. So NVIDIA is in talks to provide up to $250 billion in financing for an OpenAI data center in Ohio, as per the Wall Street Journal. Now, an NVIDIA representative was asked about this today. Or yesterday night, and they had essentially no comment. They said, they gave one of those corporate cookie cutter answers, like, we will work with all providers to be able to make sure that we can ensure the security of data centers and advance the future of AI. So that effectively means, in my opinion, I think they are agreeing to this. Again, they didn't come out and say it, but the Wall Street Journal reports seem to be relatively accurate. So the project could cost about $500 billion. Expected to come online in 2028. The U.S. government is playing a central role with power supply through a federally backed project funded by Japan under a recent trade agreement. Secretary Lutnick is involved in allocating the power. That goes to show you why those rumors about 5% of the government owning OpenAI, or 5% of OpenAI being owned by the government. 5% of the government being owned by OpenAI would be crazy. Might be true. It's becoming too big to fail. NVIDIA is also discussing financing OpenAI's chip purchases. This is also the part which ironically pumped the stock in the pre-market. Everyone thought it was okay. And then you actually look at the headline and wait a second, this does not feel okay. Just as a pure raw headline, NVIDIA is going to finance the chip purchases of their customer. I mean, the perils to the dot-com bubble are obvious here. I mean, even if you didn't live through it, you've heard the stories of companies supplying their vendors with the financing to buy their stuff, which ultimately led to a blow up because those companies, aka OpenAI in this instance, don't have the money to actually pay for this stuff. The Ohio campus would also give OpenAI its first dedicated data center lease, reducing reliance on cloud providers like Microsoft, Amazon, and Oracle, which might be part of the reason why NVIDIA is interested in securing this for OpenAI. So that came out yesterday. NVIDIA's the new Klarna. Yeah, buy now, maybe pay never if you're OpenAI. And I think the street is upset about it. And the reason I think the street is upset about it to an extent is look, sure, you backstop OpenAI for $250 billion, and backstop doesn't mean you're giving $250 billion. Backstop just means you are on the hook for the $250 billion if OpenAI needs it. But if OpenAI is going to pay you $400 billion over the next 5 years in chip sales, then you can guarantee that revenue. And the way you're guaranteeing it is by making sure that OpenAI has the facilities and the infrastructure to be able to actually build the data center, because what goes in the data center, it's the GPUs that NVIDIA sells, right? So NVIDIA obviously wants more and more data centers. That's why they have been backstopping all these neoclouds as well. The problem is, and this goes back to the discussion we had last week about Kimi K3. A lot of people try to ignore Kimi K3 and say it's not a big deal. And the sort of general premise of Jevons paradox is accurate around Kimi K3, because obviously if the cost of tokens go down, we have more compute, which means we have more usage of tokens, which means we have more compute. That's fair. But the underlying premise that I think too many people are ignoring is that if the cost of compute goes down substantially, how do these companies, OpenAI and Anthropic, generate a margin? Now, I know there's all these ARR reports coming out saying that OpenAI is going to do 70 billion, Anthropic is going to do 80 billion by the end of the year. That's all fine and dandy, but if you're going to be a public company and you're going to be priced at a multiple that is a premium to the growth that you're experiencing, that premium growth has to keep continuing. And so the argument once again becomes, why would OpenAI need NVIDIA to backstop $250 billion of financing if two things? A, they can't generate the revenue to pay off the financing themselves to be able to go make these data centers happen, or they can't partner with other companies in the space like they partnered with before, aka Oracle. The problem with Oracle is that their credit default swaps are now reaching 2008 levels. So I think they are kind of tapped out on the debt market. Oracle right there down 1%. Also, Larry Ellison pledged most of his Oracle equity to buy freaking Warner Brothers, which now looks like a really dumb decision, because I think a lot of banks are looking at his equity and saying, well, you pledged your equity when it was at 200. Now it's at 118. Warner Brothers isn't that good of an asset. I mean, Harry Potter can only make so much money profitably. So not sure if we want to give you that much more debt. So that's the first thing. OpenAI can't pay the bills themselves. Number two, OpenAI can't find other people other than their suppliers to be able to agree to finance the debt. And so I think from those two perspectives, that's where the market is just saying, all right, earnings are good. This AI revolution makes sense. All this stuff that's happening, ROI, productivity. Again, I've been using Claude a lot over the weekend because I've been just building a bunch of different things for myself internally. And, I haven't done this in a month. So it reminded me how important these LLMs are, how important Fable 5 is. If it's taking, more than a couple minutes to get my answers, I get annoyed, which means we need more compute. All of that narrative is intact and it makes sense. But then the technical logistics of financing all this stuff is the issue. And because of those logistics, I think the market is somewhat scared. And I think the market has a right to be scared right now. And NVIDIA and OpenAI have to prove that they can continue to generate earnings and profits. OpenAI at least generate more revenue without having to be tied to a single data center. And again, I don't think that is the end of the AI trade, but it gets the market to definitely question what's happening. I think even if you're the biggest of bulls, you can acknowledge that the market is concerned about what is happening and why it's happening, even if ultimately those concerns are going to be like DeepSeek and it's not going to be that big of a deal. So that in and of itself, in the midst of a semi-unwind that we're having that could be triggered also by leverage, which we'll talk about, seems to be part of the reason why things are taking a hit. And then on top of that, you have this piece of news, which this I actually think is full of BS. Now, maybe I haven't researched it enough. You guys can let me know. But this Chinese state-backed company that has started mass producing its own DUV lithography machines, which was the headline that came out last night. The market is worried that the development could reduce China's dependence on Western suppliers like ASML and weigh on future equipment demand. That's why ASML was actually halted yesterday. That's how bad it was for ASML, because effectively, if a Chinese company is recreating EUV, which is DUV is not EUV, but if there's some version of that they're creating, which means they're going to be investing more in chip supplies in general and chip manufacturers, they're going to be less reliant on needing all the stuff that you need from the European or the United States chip companies. That's what's creating, I guess, a deeper concern around what's going on. Now, again, DUV is deep ultraviolet. EUV is extreme ultraviolet. They are fundamentally different forms of technology, but this news from the information yesterday and the potential implications of the news, being that China is building their own supplies and they don't need as much of the supplies from American companies, or they can internally create their own supplies, which means they can sell externally to other customers at a lower cost, which is effectively what Kimi K3 is doing with tokens. That is the broader issue. And that also got the market afraid yesterday. So you've got this OpenAI backing of $250 billion from NVIDIA that the market's afraid about is extreme circular financing. You've got a potential surprise rate hike that could be happening tomorrow. That's getting the market upset. You've got geopolitical tensions that have not really gotten that much better, although I think Trump is trying to calm it down today. And we'll talk about some of the stuff he said 20 minutes ago. That's also a big concern. And then you've got Chinese companies building similar technology to other American and European semiconductor companies, which again, that piece of news I think is the dumbest reason for why we sold off yesterday, because that seems like it's very far away. And that just seems like the market is just, scared in general of an oversupply happening. All of that put together speaks to the fragility of the trade, which is why Corning, even after good earnings, is down 16%. It's why T1 Energy, even after good earnings, is down 11%. This is effectively a solar play on data centers. And if data centers in general, the thesis around data centers is cooked right now, then solar is getting cooked. It's why Micron's down 6%. By the way, it doesn't help for Micron and your memory names when Kospi falls 10% yesterday, which is what happened. And we'll talk a little bit more about why that happened. But also Bernstein, which this is not a new report, but this started making a lot more mainstream news yesterday. We talked about this 2 weeks ago. This was in Bernstein's report 2 weeks ago. We specifically talked about this. Goldman Sachs also had a piece on this. And then the Asia tech analyst at Morgan Stanley also talked about this. They expect EPS to grow exponentially for Micron, SK Hynix, and Samsung, as you can see right here. But then by fiscal year 2028, Q2, Q3, they expect earnings to deteriorate. Doesn't mean earnings are going to be horrible, still going to be record earnings. They're just not going to be growing at the level that they're growing at right now, which then begs the question, is it going to be another boom and bust if we get a ton of memory online? I don't know if that's going to happen. I mean, it still seems from for everything we're seeing that memory is in short supply. We need a lot of memory. There's all this memory optimization stuff going on because we just need so much more of it. Agentic inference, robotics, all that stuff, all the bull cases you can put out there. But if this were to happen, or if this were even to kind of happen, AKA the earnings growth wasn't going to be as powerful as it was over the past 2 years, and you get a decline, and that decline can be normal, but it can't be dramatic, then the only thing you have left to save you is buybacks. And I don't know if buybacks are going to be enough to save a lot of these semiconductor stocks that might be being perceived as a boom and bust, even though, again, the earnings at this point are not really suggesting that's the case. You put all that together, that's why everything is down. A bunch of you guys are saying Robinhood is down in terms of the app. Let me try to load. My Robinhood is working, so I'm not sure if it is still down for people. If it is down, that means there's a lot of people that are ready, I would guess, to sell as soon as the market opens, or are trying to sell right now. And that's the other thing that we've got going on, which is I just came back for a bunch of people. Okay, refresh, because mine is working fine. I haven't checked it in the past 10 minutes, but it's working fine for me. That's the other thing that's going on in this market that is also quite concerning. Take a look at this chart. Retail net inflows have dropped to their lowest levels since the pandemic on a 10-day moving average. This is from Vanda Research. So you've got retail that's kind of checked out of this market right now, potentially is selling more. And quite frankly, can you blame a retail investor that bought Micron at 400 and sees their gains go from 1,200 to 800? Like, they're still up a double. They might say, you know what, screw this. Let me take double my money. That's still pretty damn good. I can't be too upset about that. And maybe I'm going to be a little bit more cautious on buying the dip when the dip keeps dipping. And quite frankly, the dip is rooted in a ton of analysis around if the AI trade is over. I mean, it's really hard when everyone's telling you the AI trade is done, don't spend your money in these AI names, yada, yada. And then, these stocks keep going down, because it's one thing for someone to say, Micron's done. And then over the next 2 weeks, it goes up 20% because they're like, oh, that person was wrong. It's another thing for the media to say the semiconductor trade, the AI trade, is starting to have some cracks in it. And then things actually start to go down because price action starts to correlate with the narrative that's out there. And that leads to a lot more people being afraid. And I think that's kind of what happened with Kospi last night. So why did Kospi take a hit? Well, I think two reasons. Number one, the sentiment around memory continues to be stark with all of the different reports that are coming out from the sell side saying that we think memory could be peaking. Not only prices could be peaking, but supply could be peaking, or the demand imbalance within supply could be peaking. So those are two things that are the issue. Number two is, once again, and I honestly feel bad for a lot of the South Koreans, the leverage in that country is unbelievable. And, we've been talking about this story the entire year. We've heard all the stories of 50-year-old Koreans taking out their life insurance and getting a loan against their house, to be able to buy stocks. It's like this is a country that has not experienced any meaningful level of gains in their index over the past 5 years. As you can see right here, the past 5 years, the entire index was flat. That is not what happened to the S&P 500. The S&P 500 had a phenomenal last 5 years. So in the past 8 months, when you have this meteoric rise, to some extent, it's human nature for everyone to try chase that, especially when the culture of the entire country is rooted in gambling. Kospi right here is up 39% year to date. At one point, it was at 9,000. It had doubled for the year. So it's been a pretty ugly 60% decline from the tops. And, I think a lot of people are now wondering if it is sustainable or not. The broader story for Samsung and SK Hynix has not changed, but even the government in South Korea has acknowledged that they've probably let too much leverage enter to the system with all these single stock levered ETFs, the ability to easily get margin. We saw that story last week about a 24-year-old kid who turned 13,000 to 200,000 on a 5x margin loan, then, ended up getting liquidated. Like that leverage in the system, I don't think is fully flushed out. Yeah, you would think after a 30-40% decline, it's fully flushed out, but maybe it's not. And if it's not, unfortunately, that trade affects the United States. A lot of people are saying, what does South Korea have to do with the United States? Well, Samsung, SK Hynix, Micron, SanDisk, Western Digital, Seagate, they're all in the same bucket. That's the first thing. So if 2 of those stocks take a big hit in South Korea, the American stocks are going to take a hit. That's why Micron's down 6%. Number 2 is the South Koreans. If you put 100,000 into SK Hynix and now it's worth 800,000, you can get a margin loan, probably 3 to 4x against the 800,000. So let's say you get a credit line of 2.4 million, and let's say you go buy Palantir and Tesla and Nvidia and Oracle and all these other American stocks against your SK Hynix. Well, if SK Hynix goes down by 30%, your line of credit substantially goes down, which means you have to sell the stocks, the American stocks that you bought in South Korea, as a way to cover your margin loan, because your line of credit now goes down because the assets you were collateralizing against it goes down. And that means that those American stocks have to fall because there's more pressure of selling. And if there's not the inflows of buying coming in, because retail buyers have been bad. By the way, BM&R had a great day yesterday, up 13%, down 4% right here in the pre-markets. The fact that BM&R, so one of the most high beta names, had a great day yesterday, and like all the semis were tanking, goes to show you how much the semi sentiment is either starting to shift or did shift. And the fact that people were aping into crypto yesterday over companies that have incredible earnings, I mean, it just shows like there's a little bit of weakness on the semi trade right now. And the fact that that's happening, and the fact that we're seeing some of these liquidations in South Korea, which are obviously affecting the American markets by people having to sell, that's also creating some pain. So I think when you put all of that together, yeah, you're going to get some ugliness, and that ugliness is happening right now, which is why Trump is trying to save a lot of the market. So what did Trump say 20 minutes ago on Fox News? A couple things. This is a good time for Iran to make a deal. We have a very strong position with Iran. Iran has essentially agreed to not have a nuclear weapon. Iran needs to make it formal to not have a nuclear weapon. I'm not looking to hit power plants and bridges. I would like to avoid attacking power plants and bridges. I think on Friday, and we were covering this on Friday when Trump said, a reporter asked him, has Iran reached a tipping point? And he said, look, we're talking to them. Maybe we did reach a tipping point. Maybe we didn't. When he said that, that was the first signal to me that before he went live in that press conference, Besant showed him the 10-year, which was pushing 4.75. And Trump realized he better cool shit down, because forget the stock market. You cannot have the cost of capital approaching 5% on a US 10-year treasury in the United States. Last time that happened, the S&P 500 was down 30%. So these quotes that I just read to you sound a lot more friendly than the quotes we heard all of last week. All of last week, it was like, if they don't do anything, we're going to bomb the hell out of them. Now it's like, well, I don't want to do it. And if they could make it formal that we don't need to have a nuclear weapon, that would be not, it's just a totally different Trump, even though it's not a totally different Trump since we've seen him flip flop on this so many times. But I think the cost of the 10-year is the cost of capital in the 10-year. And then, maybe the stock market going down 3% is making him think, okay, this is just a preview of what could happen if things really get bad. But really, it's that credit cycle or the potential upcoming credit cycle if the broader 10-year and the cost of capital continues to increase, that is scaring Trump. And, as a result of that, I think maybe we're getting some level of Trump calming down. But if he doesn't fully calm down, then, we're not really going to know how the market officially interprets it. Here's one of the things he said 20 minutes ago about the Strait of Hormuz.
been said by military people, you know better, that for the 14 days that you hit him was relatively surgical. It was focused basically around the strait. But for it to amp it up, you needed more of your material in the region, and it's arrived. Has Admiral Cooper given you the type of plan that you believe will be effective in essentially destroying their nuclear, stopping their funding of proxies, as well as their ballistic program? Have you seen that on paper?
Well, it's already been mostly done. Look, we have a blockade up there right now, and only ships that we want to get through, get through. Iran doesn't control the strait. We control the strait. Now, they can drop a couple of mines in there and screw things up, but we control the strait. Our Navy is incredible. Not one ship has gotten to Iran during any time where we had the blockade. So we had the blockade. Right. We had the confines of a deal. I set the blockade back, but I didn't take it away. The ships were not far away. But
ships are not getting through now.
And then I had to bring it back. But no, this is done with the Admiral. He's great. This is all done with the Admiral. He's a great guy. General Raising Kane.
Mr. President, are we right that the no merchant ships are getting through right now? Maybe 3 or 4 a day when you need about 100?
The only ones that get through are the ones that we want to get through. They're the only ships that get through, Brian. We have a blockade that's so powerful that nobody can get through. They tried through.
So as you can see, it's not the same type of Trump we heard last week where everything he says is threatening Iran, that we're going to bomb them and they have to comply or else we're going to hurt the power plants and the bridges. I mean, I think even Trump to some extent is realizing, dude, like I've had a good economy this year, relatively speaking, when you look at the jobs data and the stock market still up 7% year to date, even though the high beta names are down. All of that can be decimated pretty quickly if we legit put boots on the ground and get back to attacking. Even oil down 10% in the past 2 days. I think Trump is liking to see oil come down. And, you know, as a result of that, I think he might want to have some level of potential peace. So we're going to have to see what happens. But overall, you know, that is still a cloud of uncertainty that exists over the United States. Iran's Joint Military Command says any country or company that receives Iranian confiscated assets won't be allowed to transit through the Strait of Hormuz. As per Iranian state media, Iran also won't let those who take Iranian frozen funds pass Hormuz. This is obviously a response to what happened to what happened last week, where the United States said we were going to keep Iranian funds frozen and potentially use those frozen funds. So, you know, even Iran is trying to keep up a strong face here and grandstand, but at some point, both sides need to have some level of conclusion. We had that report on Friday that China potentially is going to try to intermediate the situation and resolve it. I don't know if that's actually true. Trump tweeted about China, which made me think maybe he's open to letting China discuss and potentially help negotiate with Iran. But, you know, as of now, it seems like the semiconductor trade unwinding has less to do with Iran. But if Iran continues to escalate, it could have more to do with Iran, because the geopolitics of oil prices going up and the 10-year going up would be bad for high beta. We have a couple other headlines right here. 10 minutes until the market opens. Moonshot, that company that's responsible for Kimi KI, the information reported this morning that they are reportedly seeking more NVIDIA Blackwell GPUs for Kimi K4, a planned model larger than Kimi K3. Kimi K3 has 2.8 trillion parameters, and Moonshot is using the NVIDIA H20 chips for inference and recommends at least 64 chips to host K3, which means they need more Blackwells. This goes to the broader point of the market, the Gavin Bakers of the world, the Jensens of the world, which, by the way, Jensen just did an interview, which here's a clip of that interview that I thought was really important, where he says, look, the open source models are going to require more compute. It's going to require more elements of the semiconductor and stack to participate, which is why selling off the semi-nabes doesn't make a lot of sense if something like Kimi K3, Moonshot wants even more Blackwell chips. But nonetheless, the market is either not believing that or thinking that the circular financing around getting those chips out there is not the most friendliest element towards the broader AI trade.
But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just a billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important. But
NVIDIA did announce a $500 billion partnership with SK Hynix last week as well. Here's the thing on the semiconductor trade when you hear something like that from Jensen. If you believe him, 1,000% that the semiconductor industry will be 10x larger, which again, Jensen's saying that because, you know, he's going to sell a lot of chips. Like that's probably going to make NVIDIA a $20, $25 trillion company if that happens. I mean, if you take it literally, it would be a $50 trillion company if it's 10x larger. But like if you believe that's the case, then all of these are dip buys. All of these are dip. Every last freaking semiconductor name that's down 30, 40% is in dip buy territory if the industry is going to increase 10x. If you think Jensen might be right that we're going to need a lot more compute, but that there are going to be internal nuances in how that supply comes online, in the relationship between demand and supply, in the relationship between the pricing power these companies have, these vendors, these distributors that get this stuff online, in the private credit issues with financing this entire build out, because that's also a big concern. By the way, it's not just Oracle's credit default swaps that are swiping up. It's also NVIDIA. So you have Oracle right here with their credit default swaps going much higher, but you also have NVIDIA's credit default swaps going higher after a few months, because now the market is starting to feel a little concerned. You know, NVIDIA's debt is still a lot better than Oracle's debt, but the market's still a little concerned around, hey, how much money are they actually putting out there? Oh, what I forgot to mention, NVIDIA invested $5 billion yesterday. What annoyed me about NVIDIA yesterday is they put out a press release saying they made an announcement, an investment in Super Safe Intelligence, Ilya's company, who's like one of the, you know, the grandfathers of AI. So like it makes sense for them to invest in his company, but they wouldn't announce how much. And that actually pissed me off. It's like, we made a substantial investment in Ilya. It's like, how much did you invest? Like, just tell us. Like, why are you hiding this? We had to go through reporters to figure out it was a $5 billion investment. And it's stuff like that that I think pisses off the market. It's like, you're not obligated to tell us how much you invested, but you're one of the most important companies in the world. Everyone keeps track of your balance sheet. Like, we know how much cash you have. So it would be nice for you to just tell us how much money you're investing, which once again adds to the concerns about the circular financing, because the market's like, oh, they're investing in a startup because that startup's going to take all that money that they just got from an investment from Jensen and go to buy back chips. Which again, if that startup can produce revenue from buying those chips, then that's fine. But the circular nature of it and the lack of transparency around it, which is kind of annoying. It's like, okay, you made a $5 billion investment. Tell us you made a $5 billion investment. I think kind of pissed off the markets yesterday as well. And it added to the broader sentiment of the trade, you know, being in question, which is what we're seeing right now. Now, Morgan Stanley's Mike Wilson called this 3 weeks ago. He said the semis are going to take a break, but he also thinks the S&P 500 still hits 8,000. So here's what he said this morning. I think his logic is actually pretty sound on this. And essentially his argument is we might have already experienced the worst of what we had to experience when it comes to the semis.
We addressed that by, just like in 2021, right? You had the big recovery off of COVID. The market then about halfway through, middle of 21, we had a peak in the revision factors, right? And we've talked about this over the last month or two. One of the reasons we've been negative on semiconductors is because the peak rate of change is now in for revisions. And that is now leading to what we call a quality rotation. So the broadening out story is still working, but it's morphing, just like you were just talking about the earnings, right? We're seeing, Sherwin-Williams, do really well. And then we see some of these tech stocks put up great numbers, but they sell off. So what is that all about? It's all about the peak rate of change. It doesn't mean the CapEx cycle is over. It just means we over discounted it. Stocks trade in the future. They discounted a lot of this, just like a year ago. Multiples went up. Now multiples are coming down in anticipation of a deceleration next year. So this is the adjustment we were expecting.
So initially, you figured that it was going to get out of some of the Mag 7 and mega cap stocks into
AKA, he's saying earnings expectations are being revised to have a lot of this stuff priced in, which is why the semis have taken the hit that they've had, even though they've had good earnings, because it was priced in.
Economically sensitive areas. That's already happened.
Well, the early cycle. So remember, the economy goes early cycle, mid cycle, late cycle through a recovery. The early recovery part of this rolling recovery is now behind us. Okay. By the way, it doesn't mean that all those stocks have to go to zero. It just means that they are no longer the leadership.
Quality. Sherwin-Williams is quality.
It can be. I mean, we posted a list of they're across a lot of different industries. It can be. It's not so much sector specific. It's now more company specific. And as you know, the hyperscalers, the reason why those stocks have underperformed is because while the earnings have been good, the free cash flow generation is atrocious. And so the market has punished them. I think a lot of that is kind of behind us. And that's now they're going after semiconductors and some of the storage names. That also is pretty well advanced. I mean, these corrections are pretty severe. Look what happened in Korea last night. So now that people are getting, kind of agreeing with us on this, I'm probably more inclined to say we're probably closer to this correction being over. And then ironically, the S&P 500 is the highest quality index in the world. Okay, let's be clear about that. But at the end of these corrections, you typically get, a pop on even the index. So I still think we're chopping around. My guess is because of the Fed uncertainty, because of the war uncertainty still, we're going to chop around for another month or so. But I'm still very constructive in where the S&P ends up for the full year.
The S&P is not even down 3%
exactly
from its high.
It's pretty amazing, right? You think about the corrections we've had. and in the leaders.
Right.
And that is a good sign, though, Becky, that there is a pretty good underlying backdrop for the economy, in my view.
So quality.
So similar arguments to what we've heard, right? The earnings have been priced in for the semis. That's why good earnings are taking the semis down, even though they have numbers, because those numbers are already priced in. The hyperscalers' free cash flow going negative is a reason for why the market is rotating still away from the hyperscalers, because those stocks have been going down with the semis. And then you go to quality. What's quality? Healthcare, defensives, financials. I mean, those are the names that are keeping the S&P 500 propped up in the midst of this aggressive high beta sell-off, with the S&P 500 down less than 3% from all-time highs. And that's also kind of what happens in the month of July. Like every July, we see a high beta momentum drawdown. People go to Coca-Cola or Verizon and those types of companies. Coca-Cola right here is up 4% in the pre-market as they had really good earnings. Verizon was up 5% last week on their earnings. Like that's where the market's going. I mean, the fact that Apple 340, seriously? Like, I think Apple makes sense. We talked about an Apple at 250. I didn't buy it, but I think a lot of us agreed, like, look, if they figure out AI, Siri, and all that stuff, there is a absolute growth story to this company that is more rooted in something that's AI native, that doesn't have to deal with spending on CapEx. All of that is fair, but they haven't figured any of that stuff out yet. There's no AI Siri that people are paying $20 a month for at the tunes of hundreds of millions of consumers. It's just iPhones in a super cycle, which is good, but that's not really changing much about the core business. So why is the market buying Apple right here, paying the multiple they're paying for Apple versus Meta or NVIDIA? It's because Apple has a ton of free cash flow. Apple's not spending any CapEx, and Apple's a safety trade. So I think the market is absolutely panicking right here. And for potentially good reasons, which we talked about throughout the entire stream. But to go into Apple, where there's not really an AI story that is materialized in any way outside of, more Macs are being sold and a foldable phone might be coming out. Again, I think there is an AI story to Apple, but for it to get a 340 premium right now when all these other stocks are being sold off right now is quite surprising. So, the market's saying, look, if Micron's going to strong arm Apple, we're going to buy Apple over Micron because we believe Apple has future durable cash flows, whereas we think Micron's a boom and bust cycle. I mean, that's how they're pricing it in right now. And I think that divergence is the opposite of what we saw in May and June. In June, the market was like, screw Apple, we're buying 600% earnings growth in Micron. And in July, the market's like, well, that 600% earnings growth might not be sustainable, it might be peaking. We're going back to safety. And as a result of that, that is the reason we've had this type of pain trade over the past month when it comes to the semis. All right, folks, here we go. 10 seconds. Thank you all for being here. We got a lot to talk about, a lot to dive into, a bunch of different earnings we'll talk about. Obviously, it was a really ugly day for semis yesterday. We're going to see if there's any potential relief here today. 9:30, July 28th, the stock market is now open. All right, wake your ass up. Let's get into it. SpaceX down 4% as we open. Rocket Lab follows it, also down 4%. Robinhood basically also down 4%. Amcor, this is kind of that's ugly. Oh my goodness. 20% down. They missed guidance by 50 or 100 million, something like that. Corning also was light on guidance. Corning actually is up from the pre-market. Corning was at 116, now it's at 124, but still down 13%. Amcor is being priced as like a boom and bust cycle right now. At least that's what a 20% decline is showing me. CoreWeave, that's down 4%. NVIDIA, are we about to lose 194? Palantir, I don't know why Palantir is down, because the software names were up yesterday, including Palantir. Today, the software names are still up, except Palantir, which is a little weird. Shopify up, that's nice at 130, that's up 30%. ServiceNow is up. Maybe Palantir's in that high beta bucket, so it's not getting some love. Microsoft is also up a little bit. Palantir seems to be one of the only software names that's actually down today, along with Oracle, but that's more data centers, and then Snowflake. So Snowflake and Palantir getting the hit. I guess they're more high beta than not, and they're having different algos that are trading them right here. But a lot of the other software names are going up, although some of them did take a hit, like CrowdStrike over the past couple of days. Nebius, that's down 6. That goes down. Dell down 6. Micron down 6. Micron was below 840 in the pre-market. Let's see if it can hold on to 840. Marvell, that's down 6. TSM, that's down 2, even though that's getting a little bit of a pump from the pre-market. TSM also got upgraded yesterday to 450. Qualcomm, that's down 3. Broadcom down T. ASML. ASML got halted yesterday. I mean, the China DUV news was that bad that ASML needed to be halted. So it goes to show the level of fear that are in these equity markets right now. And yesterday, every time you had a little bit of a sort of bounce, like I think around 12 p.m. and then 2 p.m. there were bounces. Those bounces got rejected pretty quickly, or they got rejected in the after hours. So it's one of those things where none of the bounces necessarily came to fruition. ARK is down 1.8%. Coinbase is down 3%. Meta holding on at 597, still down a lot from last week, but holding on. Robin, it looks like it wants to go below 90. Google, which I think bottomed at 317 last week, 316 now at 327. So at least that's having some level of a move higher. Tesla looks like we might be able to buy this stock below $300 if it actually goes below $300, which psychologically would be pretty devastating for Tesla. But nonetheless, I mean, the earnings have been bad for Tesla for the past 4 years now. And it feels like in an unwind, the market is finally pricing that in. SpaceX is going below 100. I don't know when. If it somehow defends $100, then okay. But there's 96% of shares that are going to be unlocked. And there's a lot of, I was talking to a friend over the weekend. He put $17,000 in SpaceX in 2020. It's worth $600,000 right now. He cannot wait to sell. He's in a lockup. He cannot wait to sell. Like, think about that person times millions of other people that got in early, especially VC funds that are just waiting. And maybe his 600,000 becomes 480,000. Okay, you turn 17 to 480. I think he'd still be pretty happy and might sell, you know? So I think there's going to be so much selling pressure on this freaking stock. And so this just looks like a disaster. I think this might be one of the worst 2-3 month performances after IPO, but there's just so many insiders ready to sell. And there's going to be a lockup period that expires over the next year with not that many good fundamentals holding up the stock, at least at this valuation. Nebius right there, that's down 6%. Dell going down 11%. Where is SMCI after doubling their margins last week? SMCI down 6% right here. So even the doubling of margins from SMCI from 8 to 17% was not enough to hold this one up if the broader semiconductor trade is taking a big hit. Corning is down 14%. Again, NVIDIA owns a ton of Corning at that 160 level right here. So this one's well below that NVIDIA purchase price. Rocket Lab looks like it wants to go below 60, 6% down as soon as it is opening up. Robinhood, very close to going below 90. It actually touched below 90 for a second. Palantir, kind of going the opposite of the software names here. Really not holding up with some of the software names. Netflix is up a little bit. Verizon's obviously up. Coca-Cola's up. Uber's up. Uber was down last week because of the Waymo partnership being canceled, but still is relatively cheap and defensive compared to many of the high beta names. Iren, that's down 5%. CoreWeave is down 5.35%. It does feel like falling knives are everywhere. And, you know, the worst of them are getting hit today. SoFi is down 2.5%. Oklo is down 5.5%. I have not looked at AMD since yesterday. Yesterday, I looked at it. I think it was around 480. Okay, 459. There we go. Now, this bounced at 460 on Wednesday last week. I remember 460 was the low. So it is below that 460 low by about a couple bucks. I guess let's see if it breaks 450. And we actually head lower on Mr. AMD. The problem with AMD is, again, nothing about the core business or the AMD event fundamentals are wrong. It's just if the semis are in a downturn, everything in the semis, you can't report earnings and have good catalysts and have events when SMH is falling 4%. I mean, every single thing in the semis. Cerebras right there below IPO price, that's down 3.8%. It's going to take a hit. IBM, little recovery from the 204 level, now at 220. Potentially that 204 level was the bottom. Some of the other software names getting some love. Adobe's up 3%. Salesforce is up. SAP, that's up 4%. Deckers is up 3%. So you are seeing potentially a rotation into software. I still am struggling to believe it's a rotation because every time, you know, you say there's a rotation into software, the semis have a good day, software goes back down, and it's not actually a rotation. Like, it makes you think it is, but it's not. I would want to see at least a week of the semis going down every day and software going up every day. And then I'll be more convinced that there is some rotation. Right now, what I think is happening is that the market's just taking their funds out of semis and they're putting it anywhere else. And obviously software has been the pair trade all year, so software is the beneficiary. But I don't know if that means full-on rotation like Figma, Zeta, Palantir, ServiceNow, Adobe from this point forward completely outperform Micron, SanDisk, NVIDIA, AMD, etc. I think we need a bit more price action in time to see if that's the case. But at least the price action today is kind of at least to an extent, signaling that. ServiceNow up 3, Shopify up 3, Shopify breaking 130 for the first time in 5 months. Microsoft almost, there you go, 400. Microsoft also in that SaaS bucket, and then Google right there at 328 as that green. Celestica, did they have earnings today? They did. That stock's up 2. I believe they had earnings. I'll pull up the other earnings that we have. Elf is also getting some love, which is very interesting because it means that Elf right there up 3%, 86. It means that the market is picking stuff that's not semiconductor related, which, again, you can't even blame them. You can't even blame them for doing that. Elf right there, 86.52. Palantir is still down 6 here. Dell down 10. Dell was at this price last week until SMCI reported, and then Dell bounced up to like 430 or something. Actually, I think it was at like 445 the day of SMCI's announcement. And now it's right back. Which goes to show, it's like none of these catalysts, even if they're like doubling of margin type of catalysts, and SMCI is not necessarily an expensive stock. It's never had the best margins, but they just doubled their margins. That's still not enough to help the other players in the sector. Now, having said that, Dell is up a lot year to date. So once again, it's not one of those drawdowns where you can be like, man, the stock is so bad. It's like the stock's up 150% year to date. There's not much, 198% year to date. You can't complain about that. It's just the trade got very crowded up in that 480, 490 range. And, that's where a lot of people, unfortunately, are starting to see the leverage kind of wind down. And I think that's the same for many of these semiconductor names if you bought anything over the past month. T1 Energy, that's down 16%. And Micron, I think, is the large cap today that's really feeling the worst of it. 9% down. The last time we saw $820 while the market was actually open. I think we saw it once in the pre-markets a few weeks ago. Yeah, it was around end of May. 819 right there, down 9% as that is taking a hit. Amcor down 21%. I don't think this has to do with Amcor, their earnings. I think this has to do with fears around advanced packaging, the sustainability of that growth, even though Amcor obviously had good growth and missed guidance by a very slight amount. Like, I don't think it has anything to do with Amcor. It has to do with the sentiment around advanced packaging and the earnings potential for many of the semi names, which again, when I say like the market is afraid of the earnings potential for the semi names and you look at all the earnings, you're like, oh, the earnings are amazing. But that's the beauty of the market looking forward. I think the market's asking, will these earnings be that amazing if this China threat is real, or if this NVIDIA circular financing thing blows up, or if the private credit markets, aren't that friendly to the debt that's being given to the hyperscalers. Like, you put all those things together along with a potential rate hike. I mean, these stocks are just, they're not having positive catalysts to send them higher in the type of euphoric momentum we saw in June. Now, is the sell-off a bit overdone? Yeah, I think so, but a reversal from here doesn't necessarily mean that they're going back to all-time highs. It just means they might stabilize, which is what I think everyone is asking for right now. By the way, oil is still at $80, so you're seeing oil come down as NVIDIA recovers just slightly from that 193 level back up to almost 195. So you at least have NVIDIA potentially making a move higher. Oil still being at 80 and seeing this pain is, still pretty ugly as well. Big Bear AI, how's that one doing? We are down 4%. That one now below $3. Iren trying to hold on to 30, very close to losing that as well. Again, the names that are green today, SAP, your Duolingos of the world, right? This one took a big beating last year and the majority of this year. And for the past month and a half, it's outperformed every semiconductor, or at least most of them, because it bottomed. And market, I guess, decided this was a bit more safe than some of the coiled up semi names that just got a bit too crowded. Meta right there at 596, and then the S&P 500 a bit flat. Everyone is selling their high beta to get that 6% APY from X Finance. Yeah, I have seen quite an amount of people put some money into X, which is giving you a 6% APY. Obviously, that's not sustainable. They can't give you that APY forever, but 6% risk-free in this market after the bloodbath that people are seeing, that'll definitely compel some money to rotate. Nebius 170 down 8%. Again, the velocity and magnitude of this sell-off to me indicates there's a structural problem with sentiment around the trade being AI, which begs the question, is there something actually broken in the trade outside of price action? And I think that question is yet to be answered. But, if you believe Jensen, the answer is no. Then again, if you look at some of the stuff NVIDIA is doing with what they're investing, what they're backstopping, you start to question, which I think the market's starting to question, how sustainable is all of this? And it goes back to another fundamental question. I mean, again, how much, when the CDOs in 2008 popped the market, there was a lot of shit inside of those bonds that were wrapped in synthetic bonds from other bankers. I think the market's trying to question how much of the RPO, how much of the growth, how much of all this shit is wrapped in Anthropic and OpenAI commitments, and how much of that will come to fruition, which I think is part of the reason Oracle has been taking so much of a hit, because half their RPO, same thing with Microsoft, 50% of their RPO is OpenAI. And until those companies go public, we're not going to know, which is the other scary part about this. Now, the catch-22 is if they do go public and we do find out and it's bad news, we might have wanted them to stay private instead, to be honest. So part of the reason the market's questioning this is because of this circular financing stuff, which, again, I'm not the biggest proponent of that circular financing argument, being the most logical argument in the world. I think there's a lot of good arguments against it. But when Jensen, says we're going to give you a $250 billion backstop, and when he's investing in all of these new AI startups, and they're not even disclosing how much they're investing, which is just annoying as a shareholder. It's like, dude, if we're going to buy your stock, you have to tell us where you're putting your money. It can definitely start to make the market a little jittery around the idea of, is the spending sustainable, and are the commitments actually meaningful enough to follow through? And if the market doesn't feel like that, they go to Apple, trading at a premium that is well beyond all the hyperscalers, but at least that's safer than what the hyperscalers are doing. Micron right there is down 9%. By the way, people think the hyperscalers are safe. The hyperscalers are not safe. Newsflash, the hyperscalers are not safe. Let's just be very clear about that. The hyperscalers are committed to this AI spend. The hyperscalers have invested in Anthropic and OpenAI. The hyperscalers have tons of remaining performance obligations from Anthropic and OpenAI. Oh, they have a bunch of cloud revenue that's not Anthropic. Guess what? Who's the biggest client that Google's selling the TPUs to? It rhymes with Pantopic. It's Anthropic. They're the ones buying the TPUs, right? So this whole, everyone's so excited about Google's TPU business that they disclose in the earnings. Anthropic's one of the biggest buyers of those TPUs. So it's like the hyperscalers are not out of this trade. Now, the hyperscalers could stop CapEx tomorrow, and their stocks would probably go up a lot because, if they stop CapEx, the market's happy because they have all this free cash flow. But if they stop CapEx, do they also stop their revenue growth? Because are you going to buy these companies if they're going to grow revenue at 5% a year? Like, that's part of the reason they're spending on CapEx. So everything is intertwined. It's not like Meta and Microsoft are safe. I mean, this has gotten to a point where the entire economy is involved now, and you kind of have to hope that the broader build out is sustainable. And if it's not sustainable, I think people will want to figure out as soon as possible so that they can decide what to do. But, we're having one of those moments of weakness where the market's questioning that. Micron, 813, down 9.7% on the day. That was the worst rhyme in history. But you try to figure out a word in 2 seconds that rhymes with Anthropic. It's not that easy. Speaking of Anthropic, by the way, these Anthropic employees are unhinged. This dude, who's a technical researcher at Anthropic, I mean, no shame this guy has. He quote tweeted Jensen, and he's basically like, I'm so excited that Jensen is a believer in open source now. Looking forward to the CUDA and GPU driver open source release. And then he says, and Satya Nadella coming out for open source too. Can't wait for the open sourcing of Windows and Microsoft Office. I mean, these Anthropic researchers, dude, they think they're the hottest shit in the world. I mean, just like, a little bit of humility of just like, dude, you're gonna talk to Jensen like that, but they don't care. They're like, yeah, sure. Jensen thinks he's hot shit because he's endorsing open source. Guess what? He has an open source shit, which isn't exactly correct. But here's the take I heard on this yesterday, and I think this actually makes a lot of sense. Nebius right there, down 10%. Either Jensen is endorsing open source because he thinks it makes a ton of sense for the overall industry to grow compute. Okay, that's one part of the story. Or the second part, which both parts could be true, by the way, but the second part is Jensen is endorsing open source because he's afraid that Anthropic and OpenAI are actually doing too good, that he needs a way to combat what they're doing. And I think as there's both elements to things that are true, but I think the second is a bit more true, because the flywheel that Anthropic and OpenAI have been rooted in when it comes to NVIDIA's hardware, NVIDIA's software, NVIDIA's protocols, etc. If Anthropic and OpenAI are not only going to build their own chips, which they're doing with all their custom suppliers, Broadcom, Cerebras, Google, etc., and they're going to build software to run on their own chips, at some point, I think Jensen's looking 5 years into the future and he's saying, are these guys trying to cut me out? And if the closed source models win, NVIDIA now losing 193, Amkor losing 47, and the closed source models scale and Anthropic and OpenAI become massive companies that don't need NVIDIA chips theoretically to continue training and building their models. By the way, the reason Jensen is able to build the best chips is because he sees what everyone's doing on his previous generation chips, which allows him to build Vera Rubin, because he sees what's happening on Blackwell. He has the lock-in effect of the entire world using his product, and so he knows what to improve to build on that. If that flywheel dissipates because the closed source models are winning, or Anthropic and OpenAI are effectively building their own hardware and software on top of it, Corning now below 117, Palantir 9% feels a bit aggressive, below 120, then that's an issue for Jensen. That's an issue for open source, and that's a broader issue for the entire industry. Even though, you're going to need a lot of compute, but if that compute is being manufactured and supplied through the model companies, that is not good for the hardware companies, definitely not good for Jensen. So I think this open source thing is not as black and white as we think it is. I don't think it's just like, oh, open source is better than closed source or vice versa. Anthropic came out with some report yesterday saying we endorse open source, but like they wrote like some 17-page article about it. No one had the time to read it. But essentially, I think what they're saying is, yeah, we're fine with open source, but we're not fine with every part of it, which effectively means they don't want to sign Jensen's letter. They don't want to commit themselves to it, which is why they didn't sign the letter. And they want to keep making money via their closed source API, which I don't even blame them. That's their business, and it's working, and it's making a lot of money. But I think Jensen is also trying to combat how they're doing it, which is why he's starting this open source revolution. And there's a lot of nuances to that broader story. NVIDIA right there, 193.90. Everything today, folks, is just getting wrecked, except a few software names. Even the hyperscalers that were somewhat green are not green anymore. Micron down 9 as that's getting hit. T1 Energy down 20. Marvell down 8. Rocket Lab down 7. Robinhood loses 90. Robinhood has earnings tomorrow. That's down 6%. BMNR, that's down 7. ARM down 8. I mean, you're seeing pretty much every name. Nebius loses 170. Bottomed at 160 2 weeks ago. So let's see if it can defend 160, but that's still down 9%. Coca-Cola and Verizon, those are the stocks that are up today. Coke right there, up 6.3. Having said that, I do think a lot of this move is exaggerated. I think we spent the past hour today talking about all the different bear cases that are there, because I think it's important to analyze and really break down every single reason why the bears could be right, and what the nuances are for why the market is reacting this way. But at its core, if the earnings continue to compound the way that they're compounding, and the demand for compute continues to outstrip the supply, which if you look at some of these stats on data centers, dude, we are not building enough data centers. And every data center that we try to build has to deal with all these building permits that ends up delaying. I mean, you have New York State in and of itself banning data centers. So like the idea of compute constraints as the thesis for why the earnings will accelerate, I don't think that's changed even the slightest. ASML told us the same thing. TSM told us the same thing. Intel told us the same thing. So if that's the fundamental narrative that should be the basis for price action, then obviously that's not correlating with price action, but that narrative has not broken. And I think if that narrative were to break, it's a different question. If we weren't compute constrained, if there were unlimited amounts of GPUs, if we were popping up a new data center every other week, then it's a different question. But the reality is that's not happening. And so then it asks yourself, why is the market resetting right here? And it feels like that's more of a leverage issue, a margin issue, a reset of valuations issue, a consolidation issue. Many of these stocks, even after these 40% drawdowns, are still up massively year to date. I don't believe it's the rotation thing, because I think the market still believes software is dead. It's just the days the semis that go down the algos automatically by the software name. So I don't really think it's a full-on rotation. You would need to see a much more violent move on software to see it's a rotation, which the market could do easily. The semis are down so much, and the software names are up, what, 3%? IGV's up 3% in a month or something. Like the semis are down. SMH is down 18% peak to trough. IGV is up 1.3% in the past month. Do not tell me this is a software rotation. And by the way, I have way more software than semis, so I would love for it to be a software. I would love for Palantir and ServiceNow and Shopify and Reddit. But this is not a software rotation. Like if the market wanted to rotate into software, they have ample excuses to do that. This to me is more technical software buying on the days that semis sell off, which then begs the question, why are the semis selling off? And that feels a little bit more rooted in market dynamics, not fundamental dynamics, which means that some of these names feel rather attractive, but obviously price action is going against us right here. 194 here on NVIDIA. Dell down 14%, 14% as well. Yeah, you could have bought Coke in the beginning of the year and outperformed every single Mag 7. That is also fair. Yeah, definitely flight to safety. Netflix, which at the end of the day, they have some growth concerns, but they are safe. I mean, the market has never really thought people would cancel their Netflix subscriptions in a recession. In fact, it might get more Netflix subscriptions because that's a source of entertainment during a recession if you don't want to go out, even if there are growth concerns. So that's up. Uber's up. People are still going to travel. People might use Uber more than getting on flights and cruise lines during a recession, right? So McDonald's is up. That's a flight. I mean, Verizon, all of these names that are getting the bid today, all of them up 3 to 4%, it is purely a rebuke of the semis. And if tomorrow Micron goes up 10%, all these names will be down. But Micron's been in a downtrend, and that's why all these names have been getting hit. I do not know why Palantir is getting hit like this, but this is, I feel like, in the pre-market, it was at 131. And then I looked at it again. It was at 128. And I was like, okay, what's the news? It fell $3. I couldn't find a single piece of news. I still can't find a single piece of news other than Palantir is in a bucket of very high beta stocks outside of the software names. Palantir still trades at a pretty high multiple as well. And so if the high beta names take a beating, no matter what the earnings can show, the market doesn't care, which is why it's taking a hit. Palantir down, NVIDIA also 193.60. I don't see any news. If someone has the news, let me know, but I don't see any news. My employer, UPS, also had earnings today. They're down 5%. By the way, the thanks Alex Karp for taking some time to talk to a UPS driver. Comments were hilarious. So I appreciate that. UPS, let me pull up their numbers. You would think UPS actually would be okay if the semis were selling off, just because that's a little bit more of a safety net. Oh, PayPal had earnings, by the way, as well. PayPal beat by 8%, 138 versus 128. They beat by 3%, 8.62 versus 8.47 billion on revenue. Revenue beat by 4%. EPS missed by 1%, even though EPS is down 1% year over year. Revenue's up 8% year over year. Even though they missed or they beat EPS by 8%. PayPal's up 2.7. Feels like no one even cared about PayPal earnings today. Usually it's the same day as SoFi, so that's why I was confused of it being today. UPS, NASDAQ almost down 10% peak to trough. UPS is relatively okay earnings. They beat EPS 176 versus 166. Revenue 22.8 versus 21.8. That's a $1 billion beat on revenue. EPS, Street wanted 713. They came in at 722. That's a beat. Street wanted 90 billion of revenue. They came in at 91.2. They beat fiscal year revenue guidance by 1.2 billion as well. They also increased adjusted operating profit. There's probably a broader story that they set around the consumer for why the stock's taking a hit, but that's down 5%. Sherwin-Williams, another one of those examples of quality names, that's up 8% of the day. I mean, Sherwin-Williams, Verizon, Coca-Cola, Uber, Netflix, like these names are not up because the market somehow loves these names. These names are up as a way to rebuke the semi names that are going down so much in the market. Obviously going to safety right here. And can you wear a green hoodie instead of red? I wore the red hoodie today because of the pre-market. I mean, I looked at the pre-market. I looked at what happened yesterday. I was like, you know what? Today is the day for the hoodie. Today is the day for that. And look, I mean, these names. Look, the pre-market didn't make it feel like the selling was going to stop. Now, this is a little aggressive. Dell down 15. But it kind of felt like that would be timely given how aggressive. Is Tesla really going below 300? Nebius 165. Oh my goodness, dude. Absolutely incredible. But yeah, UPS, not sure why market is getting that upset right there. Nokia, that's down to $8. SMH, down 4%. SMH 535 was the technical target that we weren't supposed to lose. We are now at 524. So S&P is barely down. I mean, it is an absolute momentum unwind across semiconductor. Look at SanDisk, dude. It was down, what, 17% yesterday? Now down 14% today. Remember when SanDisk went from $1,000 to like $1,500 in less than a week? It was a 50% move in a week when they had their earnings. This was back in I think this was end of May. Then they ended up going to 2,300. Now they're at 1,100. I mean, so here's the question for everybody. Did SanDisk top at 2,300? Because to go from 1,100 to 2,300 feels like it's asking for a lot. When it was happening and it was going up 5% every day, it kind of just happened and you woke up one day and you're like, whoa, SanDisk is at 2,300. Now it's like, I don't know if we're going back there. And if it did top at 2,300, I mean, did Micron top at 1,250? Did NVIDIA top at 240? Like top, not just short-term top, but top. Like, or is this a memory issue? This shouldn't affect all the other semis, and NVIDIA should, be able to reasonably trade at $300 a share one day, which is what most price targets have them at based on their growth. But if NVIDIA even has a chance of getting there, doesn't NVIDIA have to take up all the semis with it? Like, NVIDIA has never gone up external to the other semis participating outside of its like rapid growth phase in 2023. But in the past year and a half, usually if NVIDIA is up, the semis follow with it. And if they did, because if SanDisk didn't top at 2,300, that means there's a double in this name right now. And if you're buying it for a double, that's a hell of a reason to buy it, right? Because getting a double out of a stock would be amazing. But how long is it going to take to get there? And also, how much sentiment are we going to need for that name to get back to 2,300, which seems like it, very far away to get there? Because all the memory catalysts are, everyone knows about them, right? Like the story is known, the alpha is known. People understand the memory thesis now. And it's kind of like many of these names started going up. Same thing with Intel over the past month. Intel down another 7% because people didn't realize how aggressive the scale up would be, whether it was CPUs, memory, etc. Now people know it. Doesn't mean the scale up's not going to be aggressive. Doesn't mean the supply demand imbalance isn't there. Same thing with photonics and fiber optics, right? Doesn't mean that Corning is not going to be high in demand over the next 5 years. It just means that people already know about it. So the alpha to be excited about that earnings growth is not necessarily there. Having said that, even if people know about it, the alpha should be there from a perspective of like, hey, there's not that many companies that can grow like these companies. So, the market should still be excited to buy them, which leads me to feel the market is afraid about the sustainability of that growth. Because even if the story is well known, the market could still take a chance on the story because the earnings growth is there and it's better than pretty much every other sector in the entire economy when it comes to actual year-over-year growth. But if the market's actually doubting the earnings story, which is a whole different question, then unfortunately, that's where these names have these 20% drawdowns right here. Palantir right there down 10%, Amcor down 24%. As that's taking a hit. JP Morgan is bullish. Morgan Stanley is bullish. Yeah, they both came out with sell-side reports yesterday. I read them. And same thing that Bank of America said. Effectively, they said buy the dip. They said a lot of this is stupid. So the market is dumb. And we think these are a fantastic opportunity for many of these names. And, Mike Wilson still thinks 8,000 by the end of the year. He just thinks we need to go through this phase to consolidate together. Morgan Stanley says the AI supply chain still offers attractive risk reward, calling the sell-off largely technical and driven by profit taking, which I don't think they're wrong about. If you look at the commodity trading advisors and the scenarios in which they sell stocks, there's always different scenarios based on where the S&P 500 goes and based on where credit default swaps go and interest rates go. These are like systematic sellers or buyers in the market. If you look at every scenario over the next month, CTAs have to sell. And, every scenario where CTAs have to buy feels amazing, but when they have to sell, it obviously hurts the market right here. The bank expects AI compute demand to outpace supply for years and remains bullish on AI capability gains, adoption, and long-term growth and AI-related capital spending. So once again, if supply outstrips or demand outstrips supply, which leads to the earnings growth continuing, and the ROI from all of that demand materializes, which I don't think anyone can say Google's ROI is not there based on these earnings, and we'll see Meta's and Microsoft's tomorrow, then, many of these names feel like they're attractively priced, and it does feel like it's more of a technical sell-off. But in the midst of it, it's hard to feel that SanDisk down 50% is a technical sell-off, even though it very well might be. But if it's not, it's not necessarily fun. Imagine what a hike will do tomorrow. Okay, let's do a poll on this. Do people think we're actually going to hike tomorrow? I know Citadel scared everybody with their report last night. Part of me thinks Citadel's being Citadel, and they want people to sell, which is also part of the reason we could be selling off today, folks. Citadel came out with a big report yesterday saying they expect the Fed to hike tomorrow. And I spelled tomorrow wrong in the poll, but it is what it is. I can never spell that word. Tomorrow, you know the two words I don't know how to spell? Tomorrow and decision. Every time I type those into Google, I spell it wrong. There's something with those words, tomorrow and decision. I always forget where the S and the C is in decision and where the M and the R is in tomorrow. But the point is, if we actually get a hike and Citadel's implying we get a hike, I think you're seeing the sell-off today because the market's like, let me get the hell out before we get a hike. And then guess what? We don't get a hike. And guess who bought all the calls? Or guess who bought all the cheap shares today? Citadel. So it's one of those things where, Citadel could be the one that's scaring a lot of people. And in reality, they know there's no way in hell Warsh is going to hike. Now, maybe he does, but I kind of think he's not, which means if he doesn't, then if the expectation is for a hike and he doesn't hike, we're probably going to get a little bit of a rip tomorrow. It doesn't mean we have to go up 10%, but it does mean that some of this sell-off is just a bit exaggerated. And maybe that's what we are seeing. Okay, most people saying no. Yeah, I can't even imagine it, dude. I mean, I could imagine it, but the argument Citadel gave, 75% of you say no, was for the Fed to establish credibility. And I don't know if they need to establish credibility. Like a hike doesn't, I don't think we need a hike for people to be like, oh, the Fed's serious. Because again, inflation is nowhere near 2022 levels. We actually had the best CPI report in the past 5 months that we got 2 weeks ago. Now, it was the worst in the past 3 years. I get it. But a lot of that is exaggerated due to the oil hikes in Iran. I mean, if we didn't have those oil price hikes, I think CPI, it wouldn't be at 2%, but it definitely wouldn't be at like 4.3%. And so I don't know if I don't know. I also don't know if Kevin Warsh wants to use a hike to establish credibility. I think Kevin Warsh thinks his task forces are going to be enough to get the market to believe that they have an actual plan of action to get inflation back down to 2%, which he's very serious about. If Kevin Warsh needed to hike to tell the market that he's serious about inflation coming down, I feel like we would have been able to sniff it out a little bit from how he talks. And at least that's not the read I get on the guy. The read I get on the guy is that he wants to use all these new external reforms to get inflation to come down. And that's why I think we're not going to get the hike tomorrow. So we're going to see Shopify right there, almost at 130, touched 130 today, 129.65 as well. Nebius absolutely smacked, dude. This thing was 230 last week, right down to 167. What would you buy right now? I mean, everything's on sale in the semis. Every single thing. This is not a day of asking what to buy. This is a day of asking yourself, are you going to buy? And I think it's the same question that most people probably had yesterday. Now it's hard because if you bought yesterday and most of the stocks you bought yesterday are down another 5%, like that's never fun. But that goes back down to time frame and how long you want to hold these names. I will tell you one thing: is SpaceX is, in my opinion, not the name to buy. Tesla either. I mean, like some of these names, dude. There's nothing they have going for them fundamentally. That's the problem. And they're finally getting punished because of the lack of fundamentals. Having said that, if the market V-shapes tomorrow, Tesla and SpaceX are going to be up, right? So like from a intraday perspective, those names could go higher. But in terms of actual fundamentals that you're holding for the next few years, that you can see the compounding earnings growth, many of these stocks are down 30, 40%. So the question is, do you believe in that earnings growth and do you want to take advantage on a day like this and a day like yesterday? And quite frankly, the past 2 weeks have been really ugly for many of these names. But I think that corresponding fear of, look, here's the thing. We talked about this last week, or actually we talked about this the first week of July because the last week of June is when we saw the sell-off. The dip is not being bought and the V-shape is not happening in the way that it was for basically the past year and a half, especially when it comes to semis. And that, I think, was at least somewhat of a signal to be like, hey, if I buy the dip, even though the stock goes down 20%, which you would think is enough to buy a dip on, it's probably not going to go down another 20%. What happened? It went down another 20%. Many of these names. Look at SK Hynix. I mean, they IPO'd this thing at 150. It's at 130. Popped up to 190 at one. But like, So it's like you're getting a very good deal if you believe that the deal is actually rooted in the truth of what the company should be worth. Same thing with Micron and SanDisk and many of these memory names. Micron right there, a little recovery from 805 to 821, did not go below 800. But this is the first month where, in a while, where the dip has not been bought. I mean, we only experienced another month like this year, which was March, and that didn't even really technically count because March was the Iran sell-off, right? So everything went red. There was no rotation into anything. Like everything was just down. As soon as we got through the Iran sell-off and we had at least one ceasefire in, every single dip was bought either within an hour or within a day, especially when it came to the semis, because the AI build-out narrative was so strong. I don't think anything has changed in that narrative, but the sentiment around that narrative has shifted, which means if you buy the dip on something down 10%, it absolutely could go down 5% the next day, even though that feels a bit exaggerated. And you have to, like, I bought Palantir last week at 125. It's at 120, right? It fell from 138. So I was like, okay, this is somewhat of an opportunity. Well, it's down another $5. This is just the nature of pretty much every dip buy that has happened. Amcor down 23. ELF is relatively flat, and then AMD down 9%. AAOI, the photonics names, that's down 15%. I also think, there is something to say about just not buying stuff you don't understand and not giving into the pressure. So, memory has been one of those sectors for me, just like, I don't understand it as much as I think I should. Don't buy it. Photonics, I don't understand it that much. Don't buy it. And so it's like, so some of those things where it's just like, okay, they're very attractive at these levels, probably due for a bounce, but that's from a trading perspective. From an investing perspective, do I understand enough about Lumentum to actually hold it? Not really. Do I think it's important? 100%. Do I get the sector? No. So it's also one of those things where it's like, if you're thinking of buying a dip in a sector that you don't understand, it's one of those questions of like, are you willing to understand and learn about the sector? And I think that also determines the basis on which some of these dips are being bought. And I think a lot of retail is just waking up and saying, bro, I don't know what the hell I bought. I've been there before. And it's like, I don't know why I bought Nebius or Lumentum. I don't even know what they do. So I'm just selling. And I think that's cascading some of the pressure to the downside, because many of these names are just hot names that people see on, in the media, on Twitter, and they buy them. Like, how many people really know what Penguin Solutions does? I know they're in the memory space, but like, I don't know. Are they making Happy Feet 4 or something? Like, I don't know what Penguin Solutions does. So down 10.7%. I can't stomach that because I don't know what the hell they do. And I think someone who bought it at 50, that's down 10% right here, is like, what, screw it. I'm going to buy Microsoft, which I know better than Penguin Solutions. And maybe that could be happening right here. So I think that is also leading to some of the sell-off. Damn it. I should have said Happy Feet 3. If I said Happy Feet 3, that joke would have been better. I said Happy Feet 4 because I thought there was already a movie I thought there was already a third edition of it. Was there a second edition of it? There was a second edition of it, but there wasn't a third one. I would have nailed it if I said Happy Feet 3. I thought there was a third edition of it. Penguin down 10%. Shopify, that's up 1.8. We have Mr. Matt Money in the chat, seeing a lot of cheap stonks today. Our boy Rocket Lab, unfortunately, getting hit right here, down about 8%. I think the other thing on Rocket Lab is, and they announced that Air Force contract yesterday. I don't think Rocket Lab's fundamentals are why this thing is selling off. Yes, it trades at a high multiple. I think everyone knows that. I think it's SpaceX, dude. I think SpaceX dictates the space trade. I've been looking at Rocket Lab and SpaceX's chart on top of each other for the past couple of weeks. They tend to move with each other. It's not one-to-one, but they tend to move with each other. So unfortunately, although SpaceX has a bunch of catalysts to the downside with the share unlocks, I think if SpaceX controls the space sector, Rocket Lab, ASTS, Lunar, Redwire, all those names unfortunately get hit. And so our boy Matt Money crushed it with this SpaceX short in the draft, which he's up like 45% on right now. But the space names, I think, are following SpaceX. And that's the broader issue with space in general. Palantir right there, back up to 120, up from 118. Bloom Energy, this one has always been a very expensive name. I don't think the short report is the reason why this is down. I think, why would you buy Bloom Energy? You buy Bloom Energy because you believe in fuel cell technology for data centers. If the market is doubting the fundamental essence of data centers in and of itself, or the ability for data centers to produce any meaningful returns, or the ROI on data centers, or the financing of data centers, then Bloom Energy takes a hit, just like T1 Energy takes a hit. All of these energy derivatives of data centers rely on data centers actually coming into fruition. And, that's not what the market is feeling right now if the data center trade is taking a little bit of a breather. Now, T1 in particular, this one took a hit. T1 Energy expects preliminary Q2 sales of 245 to 255 million. This was a little bit lower than expected. They expected a Q2 loss as well, and they raised their Austin site estimate for costs by around 20% for their Austin solar cell facility. 510 million versus 425 million. So T1 particularly is getting a catalyst to go down today based on the raising of costs. But in general, the energy derivative of data centers is taking a pretty big hit. About 75% of you do not think we are going to get a Fed hike tomorrow. I would agree. Here's the thing. Let's say tomorrow, Warsh is super dovish and we still go down tomorrow. Well, let's say tomorrow the S&P actually falls 1.5%, which, by the way, that's what the S&P did last time Warsh did the FOMC. And he's dovish. He's not even hawkish. They're not signaling a hike, nothing like that. Then I think the market's just upset. Then I think the market's just genuinely upset. And there's something that they're upset about, that they need to flush out a lot of leverage and a lot of capital to, go back to not being upset. Amcor right there down 24. But if we get a dovish Fed tomorrow with a no hike, and markets once again have their third day of just red, which it looks like today we are going to end. I mean, if we end up reversing today, I don't think that reversal is going to actually be green. Rocket Lab's down 9. Maybe Rocket Lab ends out only down 5, which would be a blessing at this point. Micron, if that could somehow end at like 820 instead of 807, but there would still be down 7-8% on the day. So tomorrow would be the third day in a row. Then you've got Meta and Microsoft after hours, which, if they say some stuff that the market doesn't like, which, by the way, what they're going to say is that we're increasing CapEx. I mean, I'm pretty sure that's what Meta and Microsoft are going to hint at. And if the market doesn't like that they're going to increase CapEx and they don't react to a dovish Fed, which I don't know if they'll be dovish or not, but let's say they do, it just means the momentum unwind is going to continue to be one of the worst momentum unwinds we've seen in a while. Now, it's timely. That's kind of what happens in July and August. But this one's just more aggressive because June and April and May were so substantial it literally felt in May and June that Micron was going up 2% every day. Like every freaking day. Like at some point, right? Like you probably thought it was going to break. Now it's breaking pretty aggressively. But it didn't feel normal. It didn't feel healthy. And I think part of the reason some people stayed away from some of these names were because they were just like, this doesn't feel normal. It feels like I'm chasing. And when you feel like you're chasing it, it doesn't feel fun. Having said that, Coca-Cola doesn't go up 7% on the day for funsies. Like Coca-Cola's up because Micron's down as much as it is. So although Micron maybe got overheated, the only reason Coke is up right here is because the market's selling the semis like a Micron to buy Coke. And I think that could flip very quickly. But, it's not clipping. It's not flipping today. Does Palantir make chips or memory? I really don't understand why this is down 9% today. I don't see a single headline that would cause this. By the way, did you guys hear about CXMT? So this is the China company. This is the China company that is memory. They priced it at $85 billion. It opened at 500. It was up 470%. I think that's also part of the reason the memory stocks are taking a hit. They're giving CXMT a 30x premium as Micron loses 800. Whereas Micron, SK Hynix, and Samsung are 6, 4, and 4. So a couple thoughts on this. Number one, China obviously mispriced the IPO. And the reason they mispriced the IPO is because they thought that the Chinese capital markets wouldn't be able to handle a $500 billion IPO. It was the second largest IPO in the history of the country. So whoever bought the IPO did very well. Number two, there's only 7% of shares outstanding, if I'm not wrong, for CXMT. So they're also having that same game where a lot of the shares are still locked up. Number 3, I think the fear of Chinese memory flooding the American markets, which I don't think is that justified because the Chinese domestic manufacturers like a Huawei, Tencent, Baba need as much memory as they can get. That is also bringing down some of the memory names as Micron falls to 791. And why is it bringing down some of the memory names? Well, I mean, if we get into an oversupply because of China, even if the U.S. companies can't buy from China, which it doesn't seem like Lutnick and Trump are going to let Apple, buy Chinese memory, that still ends up being a concern around the supply-demand imbalance that these memory stocks are benefiting from. So I think that is another thing we didn't talk about today, that the CXMT IPO, unfortunately, is a catalyst to the downside for memory right now. S&P 500 only down about 0.3 right here. SK Hynix down 10%. And, again, if we want to take a much more bearish case on Micron, it's one of those things where it's like, look, it's a supplier at the end of the day. Is a supplier supposed to be worth as much as the company that is, the most valuable company in the world? Is it supposed to be worth half as much? Is it supposed to be worth a third of as much? At the end of the day, there's many companies that do the same thing as them. Yes, we're not going to get fabs online for a long time, but if there's any break in the narrative that, the supply-demand imbalance is going to continue to persist, does Micron continue getting the premium? I think that's the question that everyone's been asking all year around memory. Now, logically, the cycle is going to last longer than expected, so theoretically, that name should get a higher premium. But if the market's sniffing out that even if the cycle lasts longer, we don't think the premium is justified, then, it takes a beating. Having said that, I think this Micron drawdown is way more technical than fundamental. Because all the fundamental things I just talked about, they're valid, but I still don't think we're at the stage of the cycle where they're valid enough to be the bust part of the boom. Maybe we are. I don't think we are. This one feels more technical, but those narratives combined with the technicals and then the margin leverage liquidation around South Korea, you put all that together, like these names they kind of have to take a bigger hit given how high they were up. I think that's the bigger issue. How is 4x forward PE a premium? So once again, this is something that, I think everyone has heard people say, but during a cycle, which all the semiconductor stocks have been through many times, low PEs are the top. High PEs are the bottom. So yes, technically, you could call that a premium. Now, logically, is 4x premium? No, obviously not. But if you look at it from its historical nature, when the PE gets low, that's when it's time to sell. And again, I do think the cycle has a lot of differences towards it, but the market's not acting like it does right now based on taking it down from 1250 to 700. And again, you don't want to get overtly bearish. Like, you don't want to get to the point where you're straight up shorting it because you need so much more memory. And if we have more agentic moments that are going to require more context windows and more memory, like, you're going to need more of this stuff, and the fabs aren't coming online fast enough. So a 4x premium shouldn't be a premium, even though from a cyclical perspective, it is technically a premium. But nonetheless, if the market decides enough is enough, then the market decides, it's like, it is what it is at some point. As Kospi was down 10%, 10% last night. Nebius continuing to get wrecked right here. Nebius 162, as that's down 14%. The same stuff happens in oil. 100% the same stuff happens in oil. Matt and Chris are correct about that. Oil has experienced the same supply demand. I mean, look at VG. Why was VG down yesterday? Why is VG down today? Because oil was down. So whoever bought VG at 15 on Monday had to experience a 15% drawdown on Tuesday. If you bought it on Friday, you had to experience a drawdown on Monday because the oil prices come down. It's a commodity. So memory, which is a commodity, if the prices are peaking and or the prices come down, then it's going to react. The stocks that are associated with every other commodity, and oil is your best comparison. The difference here is that most people think that that commodity is the most important commodity on the planet. It's putting up 85% gross margin, so it should deserve a higher premium, which is, these are all fair bullish arguments. It's just in the face of a drawdown, the market doesn't care about them. AMD down 10% here now on the day, as this one continues to get hit. NVIDIA did lose 192 for a second, bounced right off 192.74, or lost 193. Now it's right back. Nebius market cap is less than their backlog. Their backlog's like 50, if I'm not wrong, or 47. It's at 41 billion market cap here for Nebius. Nebius is taking a 50% drawdown right now. Now, again, look, if the semis go up tomorrow, your Microns, your SK Hynix, those, your SanDisk, those are going to be the big leaders. It's just every time we've had a little bit of relief, the next day or in the coming hours, they end up getting hit, which goes to show that all these bounces are actually dead cat bounces. Lumentum right there, potentially going below 600, down 15%. And we are going to need a substantial catalyst or V-shaped recovery for these names to not feel like they're dead cat bounces. Micron went to 900 yesterday at 4 p.m. after falling to 800 during the day. I mean, you talk about, and now it's at 794. Like, you talk about dead cat bounces or people or algos feeling, all right, enough is enough, it's going to be okay, and then it just gets wrecked again. That's what feels more technical to me. Once again, all the bear cases around its PE and cyclical stuff, I think all those are valid, but I don't think we are at the point of the cycle where those are the reasons for why Micron should be falling. This feels way more technical. Same thing with the photonics names, because I don't think photonics demand is dried up overnight. Even if I don't understand the photonics sector that much, it seems like we're going to need a lot more CPO. Same thing with energy. But if the whole data center trade is being questioned, then, all these names are going to be in question. Could Microsoft and Meta increasing the CapEx be the catalyst? I don't think so, because Google increased their CapEx substantially and the market didn't care. So I kind of don't know if Microsoft and Meta increasing their CapEx will also help. Those are enough reasons, though, to hurt Micron. Yeah, I mean, look, in the face of a sell-off, all those bear reasons end up... All the bear reasons for any stock sound really smart when it's going down. So, like, if someone wants to rant about all the different reasons why memory sucks, like today, on a day like today, it sounds like it's smart. But, in the midst of all those reasons, which I think are legitimate, I don't think those are the fundamental reasons why memory is dead or selling off. I think this entire sell-off is way more and the logic behind what I'm using, and maybe my logic is wrong, is the market doesn't like sending Coke up 7% in a day. They don't like giving Verizon a 4% move after a 5% move the day before. Like, the market in this high beta stock market, we don't take those names up 3-4% randomly when you have all these amazing growth stocks to invest in. You only buy those names when you're scared as shit of all these other names that are selling off. And I think that's what we're seeing right now. Now, maybe there's real fundamental reasons for that fear, and that'll be proven over the coming months. But if there's not, I think those eventually come back, even if it takes them more time to come back. ServiceNow, 4%. So some of the software names getting some relief as well. Again, I don't believe in the software rotation. I just don't believe in it. I think we're going to need to see ServiceNow at like 125, 130 for me to think. Like, I really just think this is semi sell-off by software. Now, maybe semis continue to sell off for the next few months, but a lot of that money better go into the software names to like meaningfully have a rotation. If not, then I think, again, ServiceNow is just like Verizon. It's up because semis are down. And if semis are up like crazy tomorrow, ServiceNow and Verizon will be down. We've seen it happen too many times this year. Maybe it changes at this moment, but then I would, what is the catalyst for why it's changing? Because of a rate hike? Because of NVIDIA's circular financing? Like, what is the real reason why the market changes it from this perspective? Qs are down 10% peak to trough. Q 669 right here. Are we in extreme fear? That is also a good question. Fear and greed. This is exactly like DeepSeek. Well, I don't know if it's exactly like DeepSeek, because fear and greed is at 37 fear. The DeepSeek was, okay, we have this new technology that's going to hurt the compute trade, for example. Therefore, the compute trade, sells off, which it did, and then we realized we need more compute. Now, you can say Kimi K3 is going to need more compute, and open source is going to create more compute, et cetera, et cetera. But I don't think that's why we're selling off. I think that was the reason for 2 weeks ago for why we sold off, the Kimi K3 thing. I think the reason, at least my perspective on why we're selling off today, is this NVIDIA circular financing thing, which again, I'm not a proponent of this argument being that good, but like a $250 billion backstop to a company that we don't know if they can generate a margin, which is not like DeepSeek-ish, because if Kimi K3 requires more compute, then that's amazing. That's like Jevons paradox, like all that it makes sense. But if OpenAI is the culprit of a Kimi K3-like model reducing token costs so substantially that OpenAI can't make a margin, then that's less about DeepSeek. We all know we're going to need more compute, which is the punchline to the DeepSeek moment. I think everyone already knows that. I think the market knows that. The market's not thinking, oh, we don't need more compute. I think the market's saying, dude, is OpenAI legit the thing that cracks the trade? And this Wall Street Journal headline about NVIDIA backstopping them by $250 billion, I think it is a legit headline that the market should be afraid of. Like, I can't blame the market for being upset about it. I don't know if that's like the underlying reason for why we're selling off, but if you need $250 billion of financing from your vendor, you're having an issue with raising capital. Like, it's just that's, I don't think we have to overanalyze it. Sam Altman cannot get the money from Oracle, cannot go to Google, cannot go to Amazon, cannot go to Nadella, which, by the way, Nadella has a freaking Micron, by the way, back up to 800. Nadella has a $270 billion stake in OpenAI. Like, you would think he'd be incentivized to help ChatGPT finance their data centers, right? Because he should want OpenAI to become a $1 trillion company, because then he gets a $300 billion equity stake. If he has to go to Jensen to get the backstop, I think the market is right to at least question what the hell's going on. Now, granted, if OpenAI ends up playing out the way they need to play out, this whole backstop thing doesn't matter. But in the short term, if stocks are going to react to what's happening in the short term, absolutely, the market's going to react to it. Big Steve, thanks for the super chat. Do you think Palantir's growth is slowing? Is it priced in? I do not think Palantir's growth is slowing. I think this quarter is going to be an exceptional quarter. I genuinely don't know why they're down 10% today, especially as the software names are up. I mean, yesterday, all the software names were up, including Palantir, and the semis were down. So today it kind of felt like, I don't know, maybe there was an institutional seller that sold at the open, and that's what caused this drawdown, maybe. But I do not see a headline for that. I think the earnings are going to be fine. NVIDIA is the best positioned company to give a backstop? Yes, which is also why, like, technically the market shouldn't be upset at NVIDIA doing this. But it's not just that NVIDIA is the best company. It's NVIDIA is the potential last resort to give the backstop. And that might be also the issue. Do you think Leopold is getting margin called? Well, look, we went through his 13F. Leopold bought puts on like his entire portfolio. So I actually think that dude is going to manage this drawdown in a pretty sophisticated way. I mean, it's going to be very interesting to see his 13F in the next 2 weeks when it comes out. But he had like $10 billion of notional value of puts. So if he didn't sell them, a month ago, which he could have and still made a profit, if he had waited until now to hold those puts, I mean, he's probably not even that affected by this drawdown. Now, you can't say that for every hedge fund that's loaded up on semis. I mean, here's the other thing. Whenever there's a real ugly drawdown, something blows up. He has long TE. That's fair. TE, he's definitely bleeding on the TE, but his TE position is significantly smaller than like Bloom Energy or SanDisk or Intel or whatever. But is there a hedge fund blowing up behind the scenes right now that we don't know about? I think that's another question to ask, because whenever you have these really, really ugly drawdowns that are sustained, we don't know if this is really sustained. This is a month. This is nothing. It feels like something, but in the grand scheme of things, you need to reach at least 5-6 months of real hardcore selling for it to start qualifying as a bear market. We need to get 20% down in the S&P for it to technically qualify as a bear market, right? We need to have 2 quarters of negative GDP growth for it to qualify as a recession. Like none of that. You need to have labor market 350,000 jobless claims every week. That's like a lot of those things that need to happen for it to be a recession aren't happening. It's more of an unwind, in my opinion, particularly in the semis. But is there a fund behind the scenes that's blowing up because of how aggressively they were levered towards the semis? And if there is, that could also be some, leverage you got to flush out of the system before things can go back up. Robinhood right there, $90 as that's down 5%. Again, I think Hood is down because Hood functionally trades with the semis. The semis go up, a lot of trading volume. The semis go down, less trading volume, and that's why Hood is probably taking a hit right there. Salesforce up about 4% on the day as some of the software names getting some love. Where was the Nikkei last night? Did Japan crash as well? Yeah, Nikkei was down 4%. But again, Nikkei year to date's up 20%. Like we really haven't seen the international markets crack. I know Kospi was down 10, but Kospi's still up 40 for the year. Like we need something to break, I think, for the broader AI trade to be in a deeper jeopardy. Unless it's a slow burn every day. But, I think given the high beta violent nature of how we went up, it's going to be the same way down. The only way for it to be a slow burn is if the Fed is like hiking every month like they did in 22, or if sequentially you start to see not only the earnings go down from the big tech companies, and we know NVIDIA, AMD, they're going to crush earnings based on the numbers we've seen already, but also you see the catalyst start to fade away. Like, for example, part of the reason why the AI inference trade became so important is because of agents that were basically introduced in December of last year. Like agents became a thing in December of 2025. What if we go a year without having like another agent moment? Like another thing that creates like the biggest use case for AI right now is coding. I think it's pretty obvious. We need another use case. We need like 10 more use cases as big as coding. If Jensen says we're going to 10x the semiconductor industry, I would say we need at least another couple of use cases as massive as coding. And I don't know if we have those yet. I know people say robotics, but if you listen to Elon, it's a long time away. I think we should believe Elon there because Elon usually says everything is a couple days away. So if he's saying it's a long time away, let's believe Elon. FSD, self-driving, cool, but that's not really going vertical. I love FSD, but Tesla only sold about 1.5 million subscriptions. It's not like 80 million people every 90 days are signing up to self-driving cars. So then what is that next big thing? And I think that's also what the market is trying to think about. A lot of it is enterprise adoption, enterprise automation. That's fair. That's why Claude Cowork and all those things have become really important. But I think the market also wants to see what's the next thing. Now, even with coding or enterprise AI, that in and of itself is keeping us compute constrained, right? But the fear of those compute constraints going away would mean that if we add a few more use cases like coding at the massive scale that coding is at, maybe that would also get the market to realize how unbelievably compute constrained we actually are if we need, literally, as Jensen would say, 10x the amount of data centers that we need right now. And I think that would also help the narrative around these AI names. But until then, it's just momentum has died, and no one knows when it's coming back. Oracle right there down 3.6. The good thing about momentum is it can come back very, very quickly. And it can come back pretty quickly in the semiconductor industry on, a piece of good news that completely changes the market's perspective. But I think the past month is just like this China DUV headline, the Kimi K3 headline, the Oracle credit default swaps, the memory companies in China, the rate hike. Like every piece of news we've had basically for a month has been bad news, or has been news that makes the market think, okay, stocks are at all-time highs. Is there any upside from here, or do we need to reset? And it feels like there's been more of an inclination to reset. NVIDIA getting a green candle right here is fun. It's nice to see 195, but is that going to last? NVIDIA did this 3 times yesterday, and all 3 times it ended up going back down. So it's one of those things where it's like, all right, this is the, what? It's what, 10:30? All right, so algos are going to come in, start buying up Micron from 709 to 810. Will they actually last? Will they actually be able to hold up? Verizon and Coke will probably go down. Guess what? Verizon and Coke, red candles. Who would have thought that if Micron and NVIDIA get a $4 green candle, Verizon and Coke would go down? I mean, this is so programmed at this point. Like, it feels like a game seeing which stocks go up and down based on movement. But if NVIDIA tops out at 195.80 and we go right back down and Coca-Cola goes right back up, I mean, it's just hilarious seeing how it's playing out. Doug says Sam Altman had made enemies of almost everyone he could tap for more capital. Yeah, I mean, that's also fair. The fact that he can't get money from Nadella is a bit concerning to me. Also, I don't think Jensen loves OpenAI that much either. I mean, he's many times his body language has been rather annoyed at what OpenAI is doing, but he also knows that, they can't fail. And they're going to need to buy chips. Can a Trump tweet fix it? There was an analysis from Bloomberg. It came out like 2 days ago, and they studied the impact of Trump's tweets on the market positively. His impact is fading. He can still tank the markets, but his ability to V-shape the market up is fading. And it's kind of funny because isn't that what we all experienced? Like, we all experienced, like, over the past month, every time Trump tweeted, like, it didn't really do much. It didn't really change. It didn't really, like, even on Friday when he tweeted about China, we went up for like 2 seconds and then it went right back down. So I don't know if until Trump says the Iran war is done, we've officially agreed to a peace deal, yada, yada, whatever he has to say to make it seem like America won or whatever. I think that's the only tweet at this point that really can change things. It's like the boy who cried wolf. Yeah, I mean, this guy has tweeted so many times about ceasefire, things are okay, I'm not going to bomb Carg Island, markets reacted positively, and then a week later, it's just back to the same shit. So I guess the market just doesn't believe him as much. CoreWeave still getting hit. Rocket Lab still getting hit. Are we going to go below 60? We bottomed at 60.05. Let's see if those green candles, which are obviously correlating with SpaceX and NVIDIA, can actually hold up. My boss is on CNBC talking about my stock-based compensation. So let's see what they have to say about if my UPS stock is ever going to go up.
Company that was transformative and came with some bumps, but we're through those bumps and we have returned our company to revenue and profit growth. And that's the guidance that we gave for this year. And when you grow, well, the stock should follow.
So, Carol, I also want to ask you about the upcoming holiday season. You gave some margin guidance for the upcoming quarters, with the holiday season having the strongest margin expansion out of the guidance that you gave. What's the outlook? Again, we've heard from a number of your peers, from JB Hunt to some of the rails, about a big growth of container shipping. Generally, those contain consumer goods, part of your bread and butter, moving consumer goods B2B. Just give us your outlook for back to school, the holiday season, that entire period.
Well, it's still early in the year, and we haven't gotten all the forecasts from our customers regarding what they expect to see during peak. But early days, we're expecting to see a nice sequential lift from Q3 to Q4, about the same as we experienced last year, which is a lift of 24%.
And now you know why my company's stock has been dead. She definitely doesn't get people excited to go out and buy UPS, dude. Communication matters, man. You got to be able to get people excited to want to own your stock. UPS right there, down 5%. Yeah, I mean, dude, the numbers seem okay for UPS, but I don't know if anyone sees the CEO say, yeah, we'll have some sequential growth and is excited about it. Like, you've got to convince the market not to buy Micron and buy UPS right now. And Micron's in a pretty bad drawdown at a cheap multiple, and it is going to grow a lot more than UPS. And so that's my point about why is Verizon and Coca-Cola going up? It's not because anyone wants to own Verizon and Coca-Cola. Not in any meaningful way. I mean, obviously institutions, dividend investors, yeah, but like the active investor that's like looking for alpha is not looking at Verizon and Coke. There's nothing in those earnings or UPS to be excited about. But you're going to buy those names as a defensive strategy if, you know, your main names are getting clobbered. And I think that's why those names are going up. UPS also has a big Amazon issue where Amazon's vertically integrating. Same thing with FedEx. Amazon, wow, below 230. Goodness gracious, dude. Below 230, 1.28% down. This stock has also not been fun for, you know, many of the people that bet on the Mag 7. I think Tesla's the only one doing worse than this, but Amazon now flat year to date. It was at 277 on the last earnings after AWS accelerated to about 28% year over year. Has completely given up all of those gains. The problem is also, look, what if Amazon increases their capex like Google? What if they also increase their margins like Google and growth, all that stuff? But then the market's like, yeah, we're not buying Amazon because of all the reasons why they didn't want to buy Google. And if that happens, you know, what happens to Microsoft? What happens to Meta? Like, again, I think 5 years from now, the hyperscalers will be fine. It's just short term if we're trying to dictate how the market's going to allow the hyperscalers to meaningfully react. If you think hyperscalers go inverse of semis, I think maybe that's possible, but realistically, I think the hyperscalers are too intertwined with semis at this point. And I would have felt more confident about that if Google actually went up on increasing capex. The $5 billion of negative free cash flow is a rounding error in terms of Google's balance sheet and Google's revenue trajectory. Like it's nothing. It's legitimately nothing. So I don't think then being negative free cash flow is a real reason the stock is down. I just think it's sentiment around how much sustainable growth can they create and how much capex is going to take to create that growth, which again, when you look at the operating margins, it's not like the growth is not there. NVIDIA trying to get above 196. But I think Meta and Microsoft will also be down. Now, having said that, Google was also not at all-time highs, but it was very close to all-time highs. Whereas Meta is not close to all-time highs, right? Microsoft's not close to all-time highs. Meta's all-time high was 800. Microsoft was at 550. So, you know, could there be a sympathy bounce on Meta and Microsoft just because they're down so much from the highs? Maybe Google was down from the highs, but not down that much when it reported earnings. It was like outperforming all the Mag 7s outside of Apple, which maybe is your catalyst for Microsoft and Meta. NVIDIA trying to go green. It did this yesterday, and it ended up being a dead cat. Couldn't stick. Having said that, I don't think there was a fundamental reason why it went down today. Maybe there doesn't have to be a super fundamental reason why it goes back up. Marvell, 9% down. My goodness, dude. As that one continues to take a hit. This is a chart that Chris just sent me. I mean, I've seen this chart before. I think a lot of people have seen this chart before. Well, see, this chart, which is euphoria to denial. This chart is only real if AI is a bubble. I mean, this was exactly how 2021 played out, by the way, especially on Bitcoin. Bitcoin had that little bounce in December of 2021 after we topped in November of 2021, tried to go into January. S&P hit an all-time high in January of 2022. And then we ended up going right down. But that's because the SPACs and NFTs and all that shit, that was actually, like, that was legit a bubble. You know, and we were about to raise interest rates. I think that chart's only real if you think AI is a bubble. Because if AI is a bubble, yeah, every bounce is going to be a bounce of, you know, denial and people thinking that we're going to be okay. If it's actually a bubble. If it's not a bubble, those bounces could still get rejected, but long term, those bounces will, probably materialize based on fundamental catalysts like earnings. I think time will tell. Yes, Corning did have earnings in the morning. This one took a pretty ugly hit. Amcor took a hit yesterday. After that one went down. Why are you showing Micron's chart? Oh my gosh. Look, here's the problem too with Micron, right? Like, I've avoided Micron this whole year because I've personally just not liked the trade and felt the commodity suppliers shouldn't get this high of a market cap, yada, yada. But it doesn't matter because anything I'm in that is directionally correlated with the semi trade, like a Nebius or a CoreWeave, for example, it's going to perform with Micron. Like, it's like, you don't have to be in the memory names to still feel the pain of what memory is feeling, because memory, neo clouds, photonics, it's all the same shit. Like, of course, there's some divergence between the stocks, but it doesn't really matter. Like, if you're in it, you're in it. Same thing with software, right? You could say, oh, well, I think, Reddit's gross margins are better than Shopify. But yeah, but Reddit and Shopify both got destroyed this year, and they're both recovering at the same time now. They're both still down a lot from the highs. So it doesn't matter how much you believe in Reddit. Like, it's in the same bucket of SaaS. And so it's one of those things with the semis is like you might have avoided some of the more uglier drawdowns. But if you're in semis, I mean, even if you're in NVIDIA, it's not been fun. And now NVIDIA hasn't had a Micron type of a move up or down because it's just too big of a company. But the point is, the sort of sentiment around it is very similar. And that's, I think, the issue we're seeing, which is why I don't think, even if someone's bearish on memory, you can necessarily be bearish Micron, because if NVIDIA goes up and AMD goes up and Intel goes up and all those companies have all these big catalysts that start coming out of nowhere, guess what's going to go up? Memory. Guess what's going to go up? EUV. Guess what's going to go up? Photonics. All these advanced packaging, they all are in a bucket, which is why Burry is short the stocks, right? The reason Burry is short the semis is because he thinks it's all fake. And so he's either going to be wrong on that or right on that. But I don't think there's anywhere to hide in the semis. You can't be like, oh, I'm going to go to CoreWeave because that's better than Oracle. It's like, dude, it's the same shit. Like, you might save 1% here or there, but like, the trade is functionally the same right now. Same thing with space, right? You can go to Lunar, Rocket Lab, ASTS. Obviously, I think Rocket Lab and ASTS are more high quality than a lot of them, but Lunar's in a 50% drawdown, Rocket Lab's in a 50% drawdown, Redwire's in a 70% drawdown. Like, the whole space trade is cooked. And the only thing you could have done in the Mag 7 to hide is Apple. Outside of that, every Mag 7 is, taking a pretty big beating. Maybe Google not as much, but Google's still down from earnings. Apple right there at 338. NVIDIA goes green. I'm just not excited about this green. It's nice to see, but I go to 200 before I get excited. I mean, I can't give you guys excitement on this. This is very similar to what happened yesterday. I want to see this really prove everybody wrong and make a move higher. Because if it doesn't, it's just getting our hopes up for no reason. Apple is the top most valued company in the world right now. That is correct. Apple's now at $5 trillion. Like, doesn't this feel exactly like yesterday? Tell me this is not exactly what happened yesterday. All these names bounced around this time, 10:50 to 12 p.m. And then by 2 p.m., they came all the way back down. So trust me, I'd be very happy if these names stick through the rest of the day, but I'm not getting my hopes up. Right now, these charts look ugly. And if they actually replicate the same pattern we had yesterday, then that means I think that means they're more concerned about the Fed. And at that point, the Fed is going to determine the trajectory for many of these names. Matt's going to sell his Porsche to buy more shares. I mean, look, if people think this is the bottom, well, here's the other thing, right? Like, it's hard to buy when it feels like a bottom, or it's hard to buy when everything's bottoming, right? Because everything's going down so much. But if it actually does bottom and it full on V shapes, NVIDIA 220s, SanDisk back to 2000, like if that happens, the rally back to the highs is going to be so aggressive because people will feel that they missed the March dip and they missed the July dip. I mean, how many people didn't buy during March, April because they thought the ceasefire was fake, which it ended up being fake, but still it was a good time to buy because, all these stocks were down so much. NVIDIA was 160, Micron was 500. Like these names have still done so well since then. If we actually V-shape, like aggressive V-shape, and all the narratives around AI being a bubble, yada, yada, that just fades out and we get some real capitulation and you start to see the market react positively towards earnings and the hyperscalers. Like if everything goes as it was going back in May and June, I think that rally will be even more aggressive because then you're going to have people saying, I can't miss this thing twice. And I think people are going to chase on the way up. And if you chase on the way up from these levels, like you're still getting the deal because, technically these names are down so much that even if you're chasing another 10% higher, you're still down 30% from the top. But we've got to see if there's any juice here. Okay, what other pieces of news do we have today? That Clarity Act, guys, does not look like it's happening. I've seen too many reports going the opposite. Today, as per CoinDesk, Clarity Act has been pushed back further. The Senate is now prioritizing nominations and a Russia sanctions bill, leaving crypto legislation unlikely to see floor time before next week. Supposed to happen on August 7th. It looks like that is not happening. It also needs a last-minute bipartisan breakthrough to pass before Congress leaves for August recess because our politicians that get paid from our taxpayer dollars have to take a whole month off in August to go to their second house in Nantucket. So unfortunately, none of the legislation that they're paid to get passed likely will get passed in August. Another headline from The Information, OpenAI and Anthropic are pushing for the US to review open source models. Why not? As open source seems to be the biggest enemy of Anthropic and OpenAI for some reason. WhatsApp from Meta introduces waiting room for group calls. WhatsApp adds call transfer between devices. Dude, WhatsApp is another thing where if you look at the stats on it, Meta has completely under-monetized it. It seems like one of the biggest things that could be a growth driver for Meta. And, it adds to the bull case, but right now it's kind of data center or bust when it comes to Meta. ARM, is that one still taking a hit? ARM is 7% down. Guys, SpaceX is not pumping. Why is SpaceX pumping? What is $1.02 is not a pump? What are we saying? This is not. I think this market has just emotionally taken us down to the point where $1 up is a pump. NVIDIA is not pumping either. 85 cents on the day is not a pump on NVIDIA. Like, okay, it recovered a little green. That's not a pump. Like, we need to see some real sustainable movement here. These charts are just broken. They've lost every single moving average. And they're expected to pump a little bit. I mean, like, they're expected to make a move high. When you have that big of a drawdown, yeah, you're going to have some buyers come in. The question is any of that real? And at least for the past month, none of it's been real. Yesterday, it was a complete head fake in the middle of the day. And so I'd like it to be real, but I feel like it's hard to bet on. And Nebius right there, 161 to 165. It's hard to monetize WhatsApp. I think the business side of WhatsApp can be monetized very well, which, Meta has started to do. Also, I mean, theoretically, I don't think Meta wants to do this, but, if you charge people like $1 a month to do international phone calls, I mean, who's not paying that? I know Meta doesn't want to do it, but like, the amount of people that use that thing around the world, the people use WhatsApp around the world to, to call their friends and family across the world. Like, it would be just such an easy subscription for people to pay for. You could also get advertising in there as well, but I think they're more concerned with growing it right now. Sand is still down 14% on the day. 1,097. Still taking a hit. Do you still have SoFi? What are your thoughts on tomorrow? Yes, I still have SoFi. Honestly, I have not done any predictions for SoFi or Hood over the past week. I was going to try to do Hood tonight. I can model Hood way better than I can model SoFi. So I'm trusting Tanner's numbers, and I saw some of Tanner's stuff yesterday. It looks like SoFi is going to beat their top line metrics, but they might be a little bit lower on financial services when it comes to revenue. Having said that, I expect SoFi to do what it always does, which is put up monster numbers and beat their expectations. The problem is if we actually get a rate hike tomorrow, which I don't think we will, but if we do, this stock's going down. If we get the hint of a rate hike in September, I think the stock still probably is going down. And again, everything I'm saying is what Noto said on our podcast. He said he feels people aren't buying SoFi, even though financials are running right now and XLF is doing well, because the market is afraid that in a higher rate environment, SoFi would not be able to create more loan originations. So there's been a lot of reasons why different stocks have been stuck all year. Grab has oil prices in Southeast Asia that has been affecting it. Uber has the robotaxi narrative, which you would think shouldn't even be a narrative given Tesla is not growing robotaxi like crazy, but nonetheless, I think that's been hurting Uber. SoFi has this rate cut narrative or this rate hike narrative that has just not been helping them break out of the box that they're in. I mean, the stock literally has been stuck between $16 and $17 all year. It's quite incredible. And so I don't know if Noto can do anything fundamental tomorrow. You know, like I don't know if he can get on that earnings call and, you know, sound motivational. I don't know if anything breaks it as NVIDIA turns red again, because why not? As SpaceX turns red again. I mean, dude, this is just comedy at this point. This is just like, this is what I'm saying, bro. It's hard to get excited about NVIDIA 197.50. I'm not going to go through that emotional stress just to see it in 2 minutes lose 25 billion in market cap. So it's, you know, like in this type of environment, SoFi, it's going to struggle. Unless the earnings are like 80% beat or something like that, which, you know, that's up to SoFi. The same thing with Hood, by the way. Hood, like, I've mapped out some of their numbers. I haven't done all of my numbers, and it looks like it's going to be a beat. But I think the beat might only be by 20%, and that's the issue. I don't know if the market's going to be happy if Hood only does 1.2 billion and the expectations are 1 billion. And so, you know, last quarter they missed, which was the issue. This quarter, I think they're going to beat because Q2 is really good. But if the analysts have kind of priced that in, you know, I don't know. The expectations on Hood, earnings tomorrow. Street wants, wow. I haven't even looked at this. Okay. So I've only done 2 months of Hood, which means I have to do another month, which should hopefully get me above this number. But revenue estimate, the street wants 1.28 billion of revenue for Robinhood. So they basically want 1.3 billion. So Hood's gonna have to come in at around 1.5, 1.6 to really have something substantial as a beat. And if they come in at like 1.29, 1.31, I mean, who knows, bro? What if the market's just like, yeah, sentiment sucks, high beta sucks, you're barely beating your numbers, good company, growing, but it's not enough for us to get excited. And I think that could easily take Hood back down to the 80s, which sucks, but like that is very possible. Now, again, if there was any quarter where Vlad was going to really beat the hell out of the numbers, I think it would be Q2. I just don't know how aggressive of a beat could actually happen. And then, you know, if Warsh actually hikes before the earnings, like all bets are off the table. Even though I hopefully don't think that's going to happen. Nebby is still taking a hit right there, 11.6%. As that's down. Where are the financials? MasterCard is up 1. Visa is up a little bit. Yes, we will have Technical Tuesday today. No, I'm not selling my Hood. Hood is a long-term position. But my point is, I know it's recovered from like the very lows of the year. Like, this is the game of investing in individual stocks. Like if they have a bad earnings, it can go back down. I mean, how many people when Micron was 1,200 thought it would really touch below 800 again? Well, it did today. You know, so this is kind of what you have to be ready to navigate if that happens. I mean, Rock Lab at 150. I saw it probably going back down to 100. I did not see it going back down to 62. I mean, that is just aggressive, right? And I think many of those high beta names just, they fundamentally decided that this market was not enough to be held up. Lumentum right there is still down 10% on the day. APLD had a great earnings, by the way. From what I looked at the numbers, Applied Digital, phenomenal earnings. Actually very bullish for CoreWeave, Nebius, and Iren. But yeah, I don't think those numbers were respected in an environment where data centers and the whole data center trade is, you know, being questioned. Oh, Trump just had a meeting with Zelensky. Reuters reporting Zelensky's meeting with Trump has ended. He will be meeting Netanyahu shortly today. So it looks like both of those people potentially at the White House here. Let's get a little bit more of an update on some of the stuff happening with this broader AI trade.
Similar with regard to CapEx. You just had a post on Twitter yesterday from one of Microsoft's AI leads about the only sustainable competitive advantage being compute. That's not something that somebody who's thinking about cutting their CapEx spend or who has suddenly become price sensitive about what they're paying for chips posts before earnings.
But is stock price action a negative reaction function? In other words, can these companies continue to guide that way, seeing how stocks are tending to react?
Yeah, because I don't think we've seen the kind of negative reaction that changes behavior here yet. Borrowing costs are getting higher, which is why NVIDIA reportedly is stepping in with $750 billion of investment in this space, which of course is that circular investment that bothers all of market participants. And so it's a question of sort of short term versus long term. There's no company out there, and again, you saw it with Google earlier last week. There's no company out there that wants to blink in terms of the pacing of building out versus their competitors. We've seen, you know, Microsoft kind of did that last year, and they've regretted it ever since.
And you think that environment remains?
It does.
That anybody who chickens out, so to speak, will regret it later?
Nobody wants to be in that position. The guiding principle for all of these companies, and they told us this almost 3 years ago now, the risk of underinvesting is far greater than the risk of overinvesting. That hasn't changed.
Right. How about the action in Korea? Is it infecting, you think, a U.S. mindset in a way?
Yeah, absolutely, because all of this stuff is tied together, right? Especially now that Hynix is listed here in the U.S. Micron is obviously very closely tied to that and is a big part of the sentiment around all of this. But the touchstone that we come back to on this is always enterprise demand. Is the enterprise demand that's there from companies like Pfizer and Walmart and Unilever and Visa, is the enterprise demand for these kind of AI tools still strong enough to justify the investment that's being made? And you see it in the backlog numbers for all of the hyperscalers. The acceleration that we've seen in hyperscaler backlog, and we'll see in hyperscaler backlog this week, the acceleration in the AI revenues out of GCP last week from Alphabet, all of that reflects that enterprise demand accelerating, and that's ultimately the main thing that matters.
So that journal piece over the weekend, corporate America has stopped blowing money on AI. I assume you think that is thematically off base.
It's just everyone stopped blowing money on AI to the extent that you were just spending with no real thought around the return that you were getting from it, which not many companies were doing that in the first place, to be clear. That is, that's off the table. Every company is looking at efficiency. How do they develop routing technologies? How do they optimize, whether it's using open source, whether it's using older models to make sure that they're getting the most out of their spend. But the overall spend is going up. The cost per query is declining as we get more efficient around that, but everyone's overall spend is going to continue to accelerate.
Are you sensing a turn in the IGV or this, the end of the SaaScopolis, the notion that this is existential risk on software?
I do think back in February, and you and I have talked about this before, back in February, we went to a place where we went from picking winners and losers to just deciding that everyone was a loser. We're now back in a picking winners and losers place. There are companies like Snowflake and Datadog that are leveraged to the volume side of this, that are leveraged to the growth and consumption, and those stocks are working now, whereas they weren't back in February. That I think is the primary change that we've seen related to software beyond positioning, which again, positioning is sort of the biggest move.
I'm glad you mentioned that because, going into this week, for example, there was a notion that positioning had been so bearish that some of these firms could print in line and just the positioning alone would be enough. But then you look at Corning today and you're like, well, that thesis didn't work that time. I just wonder how you see that working out in the coming weeks.
Yeah, I think the positioning that I'm talking about is more sort of the when you look at the market neutral funds that are out there that have to find shorts for every long that they've got. So they've been long something like memory and short something like software application software.
The old risk parity thing.
So yeah, so it's really more that kind of positioning that
As
I'm
opposed to
talking
just
about.
straight hedge fund.
Yeah, and that sort of reversal that we've seen is they've maybe pulled back to more of a net neutral kind of position.
So then to tie it up, what do you think are the most important catalysts beyond sort of the Mag 7 earnings this week?
I think the most important catalyst is we continue to see these enterprise numbers accelerate. Again, that is what we always come back to on this. And then it's going into the second half of the year as investors start to look out to 2027 and realize that the delays in data center, the delays in orders that you've seen in 26 is upside to 27, is upside to 28, and investors have to start taking those numbers up to reflect this lengthening of the cycle, which ultimately is more of a positive because it takes us out of that kind of peak and trough type cycle that investors really feared.
Yeah, you're right. As year-end budgets start getting written and printed, that's going to be more important.
I think Meta and Microsoft are going to be very, very important along with Amazon this week. I mean, again, as he said, the enterprise demand for this stuff is not slowing down. The enterprises are really the companies that have the money to support, a lot of the build out. And as long as that's not breaking, that's good. Nothing in Google showed us that's breaking, but the market is pricing these stocks like it's already broken, which is the deeper concern right here. Corning down 18, Amazon down another 1, Rocket Lab still down 7 right here. There's a new NeoCloud listing today, IOND. Cloud infrastructure company, Iconic Digital, IPOing at $53, $2.4 billion. The company owns 234 megawatts in Texas. It leases to Nscale. $53 a share, $2.4 billion. Oh, wow. They used to be a Bitcoin miner, and they were formed after the blow up of Celsius, not the energy drink. Talk about a crappy time to try to go public, dude. A NeoCloud going public today? I don't know if that's going to help. Definitely, I don't know if it's going to help sentiment. Jeremy says, I have IOND shares from Celsius. Wow, yeah. Celsius was a pretty big blow up a few years ago, right? Dude, the IPOs have been horrible this year. The IPOs have been absolutely horrible. SpaceX, the poster child of it. I mean, the stories of some of these IPOs don't matter when everything's broken, right? I think we're seeing that with SpaceX. The problem here is we need like a fundamental narrative shift and sentiment shift in this market to like even have a chance of getting back to those June highs. And if the earnings aren't doing it, if Anthropic and OpenAI are seen as pariahs by so much of the industry, if the IPOs aren't working like SpaceX, then what does it? And I think that's also part of the capitulation. Not to mention if we get a damn hike, that's also not going to help, right? So you've got a lot of things working for the bears and a lot of things going against the general bullish fever that the market's had all year. What could save it, I mean, a significant market shift would be the Iran war officially comes to an end. I mean, that would be a very significant, like legit comes to an end, not just some headline that we're coming to, but it actually comes to an end. I think that would change a lot of things. But I don't know if Trump even cares enough about the market to try to save it. I think he cares about the credit markets. I don't know if he cares that much about the stock market. Netflix right there. That's up 3%. What about the tariffs? Trump actually talked about the tariffs this morning. Trump said the tariffs aren't going to create inflation and people shouldn't worry about it. I don't know, man. I don't know how much the market cares about tariffs, but the market definitely cares about that Iran war, which is the bigger issue.
With the economy, that's going to be your focus. That was your focus yesterday in the midterms in Michigan. Are you worried that the tariffs that you put forward over the last couple of days will hurt the economy as they adjust in bringing manufacturing home?
No, because it's bringing hundreds of billions of dollars. I was at General Motors yesterday. They have the best year. They have the most trucks, the most cars. The tariffs have saved General Motors. What I've done to the auto business, what I've done to the chip business, we have chip.
With the economy.
I don't know if General Motors would agree that the tariffs saved them. In fact, I think the auto companies were not that happy about the tariffs, but if the Iran war could come to an end, maybe the market could digest some of the tariffs as well. All right, Palantir, very small bounce at 122. SK Hynix, small bounce as well, like $2. Let's see if some of the pain is at least done for today, or if it continues. AMD at 451. But yeah, the Brent is down 2%. Dude, the worst thing is oil has been collapsing in the past 48 hours, like genuinely collapsing, which means the market is pricing in this Iran thing is not going to get worse. And I think the market might be right about that based on some of the updates over the weekend. I mean, again, we were supposed to strike on Friday and we didn't, which is why Iran didn't strike on Monday, because they didn't retaliate against strikes that didn't happen, which to me is a sign of something good. But if we go back to striking, I mean, how much uglier does this get if we legit go back to a 15th day in a row of strikes? And if it is, I don't know where the 10-year goes at that point. I think oil is more manipulated than ever. I definitely think there's some manipulation in oil, but I also think that the lack of strikes from both sides for the first time in a week, because again, last week it was every single day back and forth. Kuwait, Bahrain, all of these guys were getting hit. The weekend was calm, which is why futures were so good on the weekend, right? Sunday futures were great. It's just the semi-trade unwinded yesterday, I think, based on this NVIDIA backlog. I wish that NVIDIA 250 billion headline didn't come out Sunday night, because if it didn't, I think there might be a real shot. Like, we could have had some decent recovery, but that brought in so many concerns around circular financing. And then you had, data centers that are being canceled, all that stuff hinted in. But the fact that oil came down was a signal that maybe the market thinks the Iran thing won't escalate. Intel right there down 7% here on the day. Do you think CoreWeave could go to 50? I mean, dude, if CoreWeave goes to 50, Nebius. The worst part about this is Nebius made a lot of people rich this year. Not me, but it's made a lot of people rich this year. Already, 50% of that has unfortunately gotten hit from the top. So now the question is, can it help protect those gains? Like at one point, I think Nebius was gunning to be stock of the year because so many people got in around like 70, 80 bucks. And like, you know, within a couple months up to 300 is incredible. But if it were to actually go back to the 120s, I think a lot of those gains just disappear. And then that brings you to a question around, you know, what happens to the consumer? Because again, a lot of the consumer spend in this economy is still rooted in this idea that they feel a higher level of wealth based on their portfolio. Household equity exposure is back to 1945 levels at 45%. Which means, you know, a lot of people are loaded up on names. And unfortunately, if those sell off, it might affect consumer habits. I did see my name brought up in the iced coffee hour. A lot of you guys sent me that. So that was cool. It was very dope to see. Yeah, I didn't get to watch that whole episode, but I saw that moment where I was mentioned. Is Reddit still taking a hit? Reddit. Yeah, Reddit just went red. It was green in the morning, 179 down to 177. Why is Amcor down so much? They missed the guidance by about 100 million. I do not think that should be a reason for it. But see, here's the actual reason why I think Amcor is down. I literally just thought of this. They pumped up to 80 bucks when Nvidia gave them a $1.5 billion prepayment deal that was announced last week. What if the reason they're down 35% from those levels is because the market's afraid that 1.5 billion once again is a form of circular financing? Like maybe that's actually why Amcor, because 20%, 25% down is not because of the earnings. It's not because of $100 million miss on guidance. It might be the same reason why a lot of the other semis are tanking, but Amcor in particular is part of that circular financing with NVIDIA. I mean, at this point, NVIDIA is invested in super safe intelligence, $5 billion, which is going to be circular. Obviously, everything they're doing with the neoclouds is circular. The OpenAI backstop, circular. This Amcor deal they made on Friday, circular. Like, I think even Bloomberg came out with a chart yesterday of how circular the web is becoming. And again, I'm not the biggest advocate that the circular financing is evidence of a bubble. I think it can make the market uneasy, but ultimately if there's an ROI from all these companies that exchange products and services, that's all that's going to matter. It's just if there's A, not an ROI, or B, those companies can't pay back what they committed to, that's where the market starts to get afraid. And so NVIDIA's in the middle of it, obviously. They've got all these companies. NVIDIA also invested in Corning, you know, that adds to the circular stuff. Again, to me, it's not circular if NVIDIA invests in OpenAI, OpenAI takes that money, buys NVIDIA chips, and then OpenAI takes those chips and makes external revenues that have nothing to do with NVIDIA and essentially uses NVIDIA's investment or their loan as a bridge to be able to generate more revenues. But the Kimi K3 thing got the market questioning if OpenAI can do that, if Anthropic can do that, and more importantly, OpenAI. And that with this China article about ASML competition. I mean, you put those two together and you just had a perfect set of catalysts. ASML down another 5% today for it to go down. Did anyone like really look into the DUV stuff that came out from that information article? Because I glanced at it and I was like, this technology doesn't even look the same, and it doesn't look like it's going to be happening to create a threat to ASML anytime soon. Which felt a little weird that you saw that big of a sell-off. Google is somewhat up. It's 14-year-old technology. Not really. That's the definition of circular financing. Yeah, but look, if that's the definition of circular financing, everything is circular financing. Look, at that point, if I invest in a startup and the startup uses my money to buy stuff and then to use that, like the whole economy is circular at that point. It becomes circular if a vendor gives a supplier an investment or a loan and they can't get paid back. And the market's right to question if it gets paid back. But just the nature of that going back and forth, even if it is circular, does not prove that it's a bubble. I mean, money flows throughout the entire economy back and forth. So do products and services. But like 2008, right? If I secure your mortgage and you can't actually pay the mortgage, then it becomes a circular bubble. So I think it's right to question if OpenAI can pay it back. But if OpenAI pays it back, if all these vendors pay back their loans, if Amcor uses that $1.5 billion from NVIDIA to then expand their facilities in Arizona and ends up making more revenue and pays back the $1.5 billion, like that's not circular to me. That's just using the money as a bridge. Now, the market might be upset that NVIDIA is the backstop for the bridge, but it's not intrinsically bad. I don't see any news. I know the S&P is getting a candle right there. I don't see any news. It feels like there should be news, though, because the 10-year is actually coming down really nicely. Hold on, where's oil? 10-year bond yields, not just the 10-year, also the 30-year. Oil's at 81. Yeah, banks are also circular financing. Right? But the reason banks work is because if they give out a loan, they know that they're going to make a little bit of a return on that loan, whether it's 3-4%, whatever the interest is, and that keeps the economy going. So that's the very nature of NVIDIA investing in companies they believe in is not evidence of a bubble. It is circular by the technical nature of it. It's only a bubble if the companies they invest in can't pay back or use their money in any meaningful way. Okay, oil's actually really coming down. Did Trump tweet again? Trump has not tweeted. This feels more algo rooted, folks. I don't see a Trump tweet. I don't see a news headline. I do see bond yields coming down very nicely, actually. This is the largest decline we've seen in a week. Yeah, wow, 10-year below 4.6, which would obviously get the market to be a little happy. Oh, I think this is it. Okay, Bloomberg, ahead of Netanyahu-Trump meeting, mediators believe U.S.-Iran breakthrough is near. Mediators say a proposal to revive the U.S.-Iran Memorandum of Understanding on the Strait of Hormuz is close, but awaits President Trump's decision after his meeting with Netanyahu. Pakistan, Egypt, and Qatar are advancing a plan to clarify disagreements over how the Hormuz Strait defines the MOU. S&P right there, 741. Iran and Oman have approved the proposal, which would let the U.S.-Iran talks proceed under the MOU 60-day framework. That's actually really good. The White House is waiting to decide until after Trump's closed-door meeting with Netanyahu, which is happening right now, 11 a.m. Iran argued the earlier MOU granted it a level of control over Hormuz, while the U.S. disputes that interpretation. Okay, this might actually be what we need. These NVIDIA green candles look a lot more believable now if this is the reason for it. So Trump this morning on Fox News basically said, is oil actually under 80? Hold on. Oh, wow, it's under 80. 79.70. No, that's good. That's the market at least wanting to believe this. So Trump in the morning says that we're talking to Iran. Trump on Friday said we're talking to Iran. Trump didn't do the attack the military was supposed to do Friday night, which is why Iran didn't reciprocate over the weekend. If this Netanyahu meeting somewhat goes well, it looks like it's based on this meeting now, which is it should be happening literally right now. We might actually have a headline, Nebius back to 170, maybe, that this Iran shit is coming to an end. And I don't know if that's enough to V-shape back to the highs, but at least I think that would stop a chunk of the bleeding right here. Times of Israel, mediators believe U.S. and Iran are close to a deal to resurrect the failed memory. Wow. The Times of Israel is reporting that. And I mean, I don't think Netanyahu necessarily wants a deal to happen. So the fact that the Israeli media is also reporting that the U.S. and Iran might be close to a deal, Dude, what do you guys think? Do we play this game again? Do we push away all these stupid bear cases? And do we just go back to ceasefire means stocks pump, oil goes down? Right before Hood earnings, bro? Can we actually look at Hood back to 92 right before Meta and Microsoft? Oh my gosh, dude. I don't want to believe it, but come on, man. There's no way. That's why the 10-year is going down. That makes sense. I mean, obviously, if we're actually close to resurrecting the failed MOU, the 10-year has to go down on that. The 2 years down, 5 years down, 20 years down, 30 years down. They're all down like 200 basis points. That's a pretty freaking, or sorry, not 200, 50 basis points, which is a pretty big move. But theoretically, they could fall 200 basis points if Trump actually announces a deal. Oracle just flipped green. Yeah, these green candles are a little bit more believable because A, the S&P 500 is participating. Look at the S&P. It was down 0.7. Now it's up 0.3. And then B, based on what Trump said on Fox this morning, it kind of corresponds with this report. Now, if he gets out of that meeting and says, I want to strike them harder, that would be bad. But, you know, would he really actually go down that route when he said this morning he doesn't want to do that? Having said that, I don't know if that means you buy into this trend because at this point we just don't know, but it might at least stop some of the pain. Micron's still down 9% on the day. Tesla, did we ever lose 300? We did not. We got to 300.69, 306 right now. 306.20 is where we're at. What do we think, folks? Do we trust it? He's scared of rate hikes. You know what? That might be true. Honestly, that, I mean, if Citadel's right and we're going to get a rate hike, to be honest, Trump might be taking that seriously and he might legit be afraid because he knows if we actually get a rate hike, it is not going to be fun. And maybe he's trying to get ahead of it. Like maybe the rate hike is still bad tomorrow if we get it, but it can't get worse if we escalate the war. Citadel just baited Trump. Dude, maybe. Maybe. Radio says, we always believe this crap. Trump is waiting on the White House stockbreaker on when to announce a new round of bombings. We have believed it all year. And at least for the past month, every time we believed it, we were wrong. But I also think the difference this time is that 10-year. Like every time Trump is seriously tacoed, like not a fake taco, but a serious taco, it was the 10-year as the culprit. April of 2025 and then March of 2026. I think Bessent, heads into the Oval Office and says, sir, enough is enough. We literally cannot afford to keep this going. Even the VIX is down 4%. And that's when he issues a tweet and we reverse. Maybe we are having that moment right now. Yeah, VIX is down at 18 right here. You don't say Bessent, right? Is it Bessent? I feel like more people say Bessent. I've been calling him Bessent for 2 years at this point. Do you remember when he, Bessent, top-ticked the VIX? Remember that Bloomberg interview he did in May of last year where he said, I think the VIX has peaked? He literally said, I think that was the day the VIX hit 60. I mean, that was the signal. That was the signal to buy. We need another moment like that from Bessent. That would be nice. Meta flips green again. Okay, let's see if Meta can make a run up to 600 right here. How are we feeling about Meta and Microsoft, by the way? I think they're going to crush their numbers. I'm more confident in Meta versus Microsoft. And I actually also think those stocks might do well because Meta and Microsoft both are down a lot. So I think that could help as well. John, thanks for the super chat. I rolled all my puts today. Thanks for building the community network that taught me about options. Congrats. You probably collected some pretty decent premiums on those puts today. And if we can get a little bit of a V-shape, you hopefully won't get assigned here. Paul, thanks for the super chat. The open source thread has the market pricing in Open AI and Anthropic not meeting their spending commitments, and the NVIDIA deal may have confirmed it. Yeah, exactly. I think that's exactly why we ended up getting a hit. NVIDIA, putting $250 billion in committing to business models that, again, might be commoditized, I think is the bigger issue here. I bet that's what Trump is telling Netanyahu right now. We need to end this war. Trump has had a weird relationship with Israel all year. Even yesterday, he was on Air Force One, and someone said, well, Netanyahu opposes sending F-35s to Turkey. And Trump was like, if I want to sell some F-35s to Turkey, I'm not gonna listen to anybody else. And so I think he's been annoyed all year about people thinking Netanyahu has control over him. And so maybe this is the meeting where he establishes, dude, it's time to end it.
Prime Minister Netanyahu opposes sending F-35s to Turkey. Are you going to tell him?
Look, Turkey's been a great ally for me. I think he's done a very good job. Did a good job with Syria. He's a friend of mine, and nobody tells me what we should be selling and not. Turkey's been a tremendous ally for me. It was up to Turkey. Turkey's not a big fan of Israel. You know that, right? And not a big fan of Bibi. But he is. They've been great for me. Turkey has been great. Very powerful country, by the way. Tremendous military. Very big military. Very powerful military. Has a lot of great equipment.
I mean, did you hear him? Nobody tells me, right? If that's the energy that Trump's having in this meeting right now, nobody tells me what to do. I mean, maybe, folks. I don't want to get my hopes up, but maybe, and we will find out today. Carolyn Levitt will probably be live in an hour. Someone from the White House is going to say how that meeting went. If that meeting ends up being Robin and now 93, Trump, made it clear to Netanyahu that we are going to find an end to this war. And then, you got to go through all the logistics of the actual negotiations for it. But that headline alone, if the market officially believes it, maybe we don't get a full peace deal today, but the market believes, okay, this is very similar to April of last year where the 10-year spiked up and then Trump tacoed, and Trump is now more officially tacoing here. That might be enough of a sentiment shift going into the rate hike or the rate cut tomorrow, or just the FOMC in general. SpaceX 116. These green candles actually, even Nebius, still red for the day, but you're starting to see more candles pop up. NVIDIA, if we could break through 198, that would be amazing. Still stuck at 197. Rocket Lab was almost about to go below 60. Now it's 65. Palantir was at 117, 124. T1 Energy was down 25%. It's down 15. Still down badly for the day, but there's a 10% move from the bottom. Corning was down 18 at the worst. It's down 16. It was actually down 19.5 at the worst. So Corning's still down a lot on the day, but many of these names starting to make somewhat of a little bit move higher. Here's the update on Meta and BlackRock, by the way. They announced a big data center deal, which should be bullish, but once again, the market is a bit afraid of how a lot of this stuff is getting financed at scale.
Morning, Carl. Well, Meta and BlackRock's new deal to develop and own a $14 billion data center in El Paso, Texas, illustrates Meta's strategy to build out AI infrastructure and share the costs. The data center will provide 1 gigawatt of compute capacity starting in 2028, and Meta will lease the entire campus without bearing the majority of the cost and the debt. Now, Meta's getting access to compute to both power its own models and grow its ability to potentially lease computing power. Zuckerberg has said that getting into the cloud computing market is on the table. Now, in this new venture, funds managed by BlackRock will own 80%, while Meta will retain the remaining 20%, with BlackRock financing $12.5 billion in debt and Meta taking on $1 billion in debt. This deal structure addresses two areas of concern. The cost of finance is rising. Lenders are reportedly demanding higher yields on bonds on this project than on a similar project last year. And investors are concerned about Meta's growing AI spending. Shares are down 12% since Meta's last earnings. The company said last year it plans to spend $600 billion on its data center build-out. So now investors are watching to see if Meta increases its CapEx guide. The company has said it will spend as much as $145 billion this year, and analysts are forecasting a big jump in spending next year. Wells Fargo forecasting $247 billion in CapEx next year.
I don't know if Meta is going to give us the guide for 2027, but 250 billion is a lot more than what they're spending in 2026. So once again, fundamentally, all that money is going to go to all the companies that are down 30, 40% from the highs right here in the semiconductor trade. But will the market react positively if Meta actually announces that?
Now, with pressure for Meta to explain its plan to monetize its AI compute, Mark Zuckerberg will likely highlight this example of how it's partnering to minimize cost. And we're watching to see if he says more about launching an AI cloud business. Guys?
Julia, the stock behavior has been really interesting. It was around 565 the day they announced this new strategy, potentially to have compute as a product. Got $100, as Kramer said it would, and then it's now filled not all of that gap, but some of it. It's been a sort of a tempestuous stock around the 600 level.
Yeah, I mean, if you look back at Mark Zuckerberg.
Has anyone heard that word before? Tempestuous? That's a hell of a word. We need to look up what that means. That's a good one. Talk about word of the day. That's a good one. Tempestuous. I've never heard that one before.
Comments at Meta's shareholder meeting. We dug into those comments, and he said if they overinvest in compute, if they have more compute than they can use themselves, then they will definitely see this as an opportunity to have this on the table. But the more deals like this that Meta does, the more you could see getting into the AI cloud business is not just something they could do just in case it doesn't work out for them to use all the compute themselves. It could be a whole new revenue stream. There have been reports that Meta is going to get into a $10 billion deal with Anthropic to provide compute to Anthropic. And so the question is whether this is a great opportunity and something that unlocks new value for Meta and also reassures investors. So we'll see how the conversation shifts. Zuckerberg has been really careful with the language he's been using here.
Well, they've done a number of successful sort of pivots and shifts in their public history, Julia. We'll see what he says. Thank you.
All right. That's your Meta update when it comes to data centers. I think that is it for us today, folks. I will be back on the market close with Mr. Jason. By the way, that word is an adjective that means stormy or turbulent, categorized by violent or strong emotions. Tempestuous. Not a bad word. Do we have any earnings today on the close? Oh, wow. We have a lot. Visa, Bloom, Seagate, Waste Management, KLAC, Enphase, Cheesecake, Teradyne, Enphase, Ford, Tilray, and Skyworks. Okay, so we will have a busy afternoon. We'll probably have Technical Tuesday starting around 4:30. Or 4:35. We'll get through all the earnings. We're not going to listen to any of the earnings calls. We will get through all the numbers. Then we'll get Jason on for TT. So we'll spend about 40 minutes getting through all the numbers. That's a lot. I didn't know we had those many earnings today. Tomorrow is going to be a big one. Meta, Microsoft, Hood. And so we'll have a lot to dive in on those as well. SoFi in the morning. I'll be up for that. And then we have FOMC during the day. So tomorrow's going to be a long day as well. But today we have plenty of earnings to go through. And then we will get into TT as well. So the conclusion on the morning is if this Netanyahu meeting goes well, which market's loving it, folks. S&P high of days. Like if it really does end up doing what it needs to do, and Trump actually comments on it, and maybe it's not today, maybe it's tomorrow. Maybe that's enough. Oil below 80 for the market to sniff out. This could be the catalyst. I don't think we're out of the woods if this happens, but at least, you know, the bloodbath, the bottom falling out every day in this unwind, which has been worse than 2000 and 2008. If you look at the momentum unwind peak to trough and the concentration there, it's actually been worse than that time. And the S&P 500 is still up 7% year to date. So it's been ugly in one sector. Maybe it's overdone. And maybe if we get a real catalyst geopolitically, that could help us as well.
So time will tell, but we will be covering it. Word of the day for us today is apopina, the tendency to perceive meaningful patterns or connections in random or unrelated data. After 3 days, investors started predicting a new bull market, a classic case of apopina. I don't think anyone's heard this word before. Apopina. I drink this all the time. Apopina. What is this? It is a market word, or at least somewhat related to the market.
Apophenia.
Apophenia. Okay, it's a little different from apopina. Apophenia, folks, is how you say this word.
Apophenia.
The tendency to perceive a connection or meaningful pattern between unrelated or random things. Okay, apophenia. That is what we got. That is what we got. You guys did not get that right, bro. You guys did not know it was apophenia. Although the P and the H is usually an F. That actually I should have been able to see that. That one should have been easier than not. But all right, there we go. That is what we got. Again, thank you all for being here. For those asking where it was yesterday, again, it was at the Palantir event. So glad people enjoyed the Karp interview. It was fun, kind of in the heat of the moment. And Karp was in good spirits. He was excited. He was energetic. They organized that open source. They call it institutional sovereignty in the age of AI. They organized it in 10 days. So shout out to Sasha because she kind of came up with the idea 10 days ago, and it was oversubscribed, and there were tons and tons of customers there. Uber was there, L3 Harris was there. There was a bunch of different people that are working with Palantir on this stuff. So it was fun. It was a good moment. Hopefully people enjoyed it. We kept swaying back and forth because you guys know Karp. He's not going to sit. At first they said, let's sit down. And I was like, there's no way we're going to be able to sit down. Because Karp is too energetic. And then they were like, you have to hold these mics. And I was like, dude, do you really think Karp is, the way he uses his hands, is he going to be able to hold a mic? Like his hands are going to be moving. So the audio is going to be messed up. So we just ended up doing it standing up in his office. And the audio ended up doing well. But I think I started swaying because he started swaying. And I was like, okay. Like, I guess I'm also very jittery. So we ended up both just swaying. The comments were hilarious. We're like, are you on a boat? I was like, this interview made me dizzy. But it was fun. There was this one moment I think that was the most important moment, at least when he was describing what's happening in corporate America. And here's what he said about what people are telling him behind the scenes.
Dangers of just, look, a lot of our clients are running around saying no ontology, no love, meaning no glove, no love. So it's probably not exactly what I can say on TV, but that's famous L word. It's like, they're like, no ontology, no love. It's gone viral in corporate America. It's crazy. So but there's a safety function. Like if you're meeting someone you don't know and who may have a history of doing things and leaving certain products behind that you can't get rid of, you probably be insane not to have ontology protecting you. So that is
talk about an analogy, dude. You really took that analogy there. It's also funny because in the beginning of the interview, we're in the middle, and by the end of the interview, he kept swaying so much that I had to keep giving him space. So I ended up going towards the end of the end of the scene right here as I'm almost tripping off the frame. But yeah, look, overall it was fun. It was a good time. Got to talk to a lot of customers at the event as well. And, the customers are super big on open source. And from the people I talked to, they and even in the interview, I asked Karp, why are the customers so impressed with open source? And he was like, because they're getting sold a bill of goods from OpenAI and Anthropic, and they're not seeing the results. And so the lack of results is what's leading them to call up Palantir, which is why I think the earnings are going to be good. And I think that's also something that the market is trying to figure out how to effectively price in for the application layer. So yeah, it was a fun time. It's good stuff. One thing I will say, dude, I've been to their New York offices a decent amount of times over the past 2 years. Every time I go to that office, I want to get a tech job because that the food
Like a fresh breakfast every day, unlimited snacks, any drink you could want. I mean, it's one of those things that I'm so jealous of the tech workers, because every time I go to their office and I'm like, I can have anything I want. Like it's just it's the most, for someone who's never worked in corporate, that is the one thing that I wish I had working in corporate. So that was fun as well, and overall got to talk to a lot of those customers. It's the snacks, right? Like it's like bacon, eggs, fruit, anything you want. Then for lunch, they have this gourmet food. I'm like, my goodness, like it's the best part of working in tech. The absolute best part. All right, that is it for me. Let's spam Steve with this word, Apofina. By the way, we spammed him with that Fifth Element freaking term. I forgot I forgot what we even spammed him with, and he immediately knew what movie it was from. It was crazy. It was absolutely crazy. There's a stream right there. Apofina is the word, but he apparently he watches all these freaking movies and he knows. I still have to watch the movie, even though it is a classic, but I just haven't watched it. You can do that at home. It's not the same, bro. If I fill my kitchen up with snacks, it's not the same as like the buffet of snacks that are just waiting for you that you don't have to pay for inside a tech company. It's just different, dude. It's just different. So that's always the fun part about going to that office. All right, there's Steve's stream. You can spam him with Apofina. I will see you guys on the market close. We'll have Technical Tuesday. We'll have a bunch of earnings. We actually have a lot to get through. And yeah, we will keep going from there. Folks, it really looks like we might have put in the bottom for the day. Robinhood almost 94, S&P almost 743. Let's see. Micron at 830. If we get that Trump tweet, maybe things can change today. All right, I'll see you guys on the market close. See you guys.